People are going to, and so we see a move 0.5% lower for the euro. We're seeing and focused instead on geopolitics, and as a result we're buying the short end of European curves. You can see the German 2-year yield at 3.1% right now, and the Brent crude price 87.22, so well off the 95s we saw at the beginning of last week. The conversation changed from supply constraint to demand. Now we're talking about supply, at least at the margin, supply concerns around Iran. 87.23 is where we trade then on Brent, up by 3.1% as a result of violence in a region that is so important for oil supply. The European futures picture then, London looking like it could move in its own direction, a bit of a standout move perhaps there as a result maybe of some of the firmer commodity prices we're seeing. I mentioned Brent, DAX and CAC futures both pointing lower this morning, so we are expecting to see broadly risk off being the sentiment this morning. So the FTSE 100 is the first out of the gates, and it is up by 0.2%, well, a tenth or two this morning. 7,506 is where we trade on the FTSE. This is the more broader strength in the dollar I was talking about in the FX column. Yes, the dollar index up by 0.3%. The euro down, also the pound, even the Swiss franc losing 0.2% today. This is the broad buying of sovereign bonds we're seeing. You can see at the 2-year, the 5-year, in particular that shorter end of the curve. That's where the action seems to be in terms of the perceived haven of those sovereign debts. And this is WTI and Brent crude. Those dominate, of course, the commodities column as we see nervousness around energy markets. We'll get further analysis as we go through the programme about what this means for energy markets, but certainly that is worth considering and building into our thinking this morning. The French CAC 40 then opening down by 0.3%. The FTSE MIB down 0.3. The Spanish IBEX down 0.8%. So commodities perhaps making the difference for London, and that's where it goes its own way with a move higher of 0.1%. Let's look at the sectors. We might expect on a day like today to only see sectors that are energy related going higher. We do also see food going higher this morning, which is interesting, but energy stocks up by more than 2% in this morning's trading session. That is quite an outsized move for European energy stocks. We do also see utilities looking fairly resilient, and perhaps that's the defensive nature of that sector playing to the fore. So utilities pretty flat this morning. Elsewhere we see some fairly substantial moves in some sectors. Travel and leisure certainly, and Joe was flagging this just before the break, the way we might see travel in particular impacted, but down by 1.2% on travel and leisure. Autos down by 0.9%, and banks also looking weaker. Let's get to analysis now from the Markets Today blog. Sophia Horta-Acosta joins us from the Markets Today blog. Sophia, there's so much to deal with when it comes to markets today. There's so much to think about when it comes to the geopolitics. Clearly, that is dominating some of the flows. In the background, though, and I know something that you've been covering quite intensely on the blog, is the UK politics story and the way that is changing. The UK politics story of the week, of course, is the Labour Party conference. It's being overshadowed by events in the Middle East, but there are certainly some themes around investment coming through.
There are. I mean, I think it was interesting to see what Keir Starmer's reaction to the war, the attack on Israel was, because he's really kind of positioning himself to be different from his predecessor, Jeremy Corbyn. And when asked on the BBC for his reaction, he said this. He basically said it was an awful attack and condemned the attack. Jeremy Corbyn is known to have shared platforms with Hamas before he became leader, and said that the key focus would essentially be to end the occupation of Palestine. So very different positions there. Keir Starmer is really trying to shake off, the past leadership of Labour, what the party used to be. He is looking, for the Labour Party to get a majority, he would need the biggest turnaround in election votes following Corbyn's defeat since 1945. So a big, big ask. What he's kind of relying on, Anna, is that kind of push towards being a more pro-business Labour Party. What you mentioned about investment, that's what Shadow Chancellor Rachel Reeves is considering. This is what my colleagues Alex Wickham and Joe Mays are reporting. This would perhaps be funded by a little bit of borrowing. Now, I think this could be slightly controversial given the memories that we have of the Liz Truss era, when borrowing does spook markets. UK is running a deficit. I should say has 99% of GDP in debt. So this could be kind of difficult to sell in the markets. But if a little bit of public investment does bring private investment, that's what the Labour Party is going for. We're watching this. Obviously, events over the weekend overshadowing it.
Yeah, absolutely. And on that front, I mean, Keir Starmer going even further and actually calling this a terror attack. So really trying to distinguish his positioning and his use of language from that which we would have seen and would have seen had Jeremy Corbyn still been leading the party. So that is interesting in itself and brings the two themes together, I guess, this morning. As we mentioned before the break then, Sophia, China and the role that China plays, the return of China to market participation after the Golden Week holiday, also in focus for us.
It was, and I think yesterday, last week, people were panicking over the sell-off in treasuries and thinking, what would this have happened if China was open? China does tend to bring a little bit of stability when it reopens. It's lackluster, as we said in the past hour. It's not a very excited reopen. If you look at the data there, the China consumer story is still not strong enough for markets to get excited about it. China, this is the world's second largest economy. It was thought that maybe a revival there, at least in the second half of the year, would bring global GDP up, would really kind of offset the weakness we're seeing in developed economies. The US is actually stronger than expected and China is weaker, so that narrative really shifting around and confusing markets. China reopening when you have these other risk factors, though, I think there's a little bit of confusion there over what actually is driving markets. We're seeing a very muted open because essentially the consumer story is not there, the property story is not there, more is needed to really generate growth there. But let's see. I mean, Hong Kong was closed this morning for another typhoon, so maybe a little bit of lack of direction.
And many other closures in the region as well. Japan closed, South Korea, Taiwan, so a lot of market closures to deal with through the Asia session. Sophia, thank you for that. Sophia Horta-Acosta from our Markets Today blog. And you can get more from the blog team. Go to the Bloomberg UK website. You can click through to the blog from there, or you can type TLIVGO on the terminal. Let's get more on our top story this morning. More than 1,100 people have been confirmed dead in violence between Israel and Hamas militants as fighting heads into a third day. The US has vowed to support Israel, moving an aircraft carrier strike group closer to the region. Bloomberg's Yusuf Gamel Eldin joining us with more. And of course, from the perspective of markets, we are seeing some of the markets in the region open up. Many of them were open yesterday, though, Yusuf. So we saw heavy selling on the Israeli Stock Exchange yesterday, down by more than 6%. We saw some other markets in the region under pressure. They're opening up for another day and looking a little more stable. What does not look stable, though, is oil prices going higher. 87.39 is where we trade on Brent.
Absolutely. So, I mean, I was looking through some of the energy market notes in the last couple of hours, and it is all about two big issues. On the one hand, what is OPEC Plus going to do in light of this escalation over the weekend, the tragedy that's been unfolding? And one school of thought is OPEC Plus doesn't do anything. And this was confirmed by the UAE and the Saudi energy minister. They've been thrown that question at a climate event in Dubai, and they said, hey, at the moment, there is no change. We're committed to what we're doing. OPEC Plus is very unified. And the other component of that is what's going to happen with Iranian crude exports, because the incremental barrels in this market have been coming from Iran, and we're back up to about 700,000 barrels per day. It's something Goldman Sachs delves into in the last hour or so. They're saying two risks here. One, the conflict reduces the likelihood of a near-term normalization in Saudi-Israeli relations and reduces the possibility of an early unwind. And it also means that the Iranian oil supply, which I just referenced, has actual risks that are tilted to the downside. So an even tighter market as we digest as well the fiery rhetoric coming from the Iranian president in the last few minutes. Anna?
And in terms of commentary coming from, movement coming from the region, I mentioned what we're seeing in regional markets today, things looking a little calmer than yesterday. Of course, we did see big reaction to this in the region in markets that trade Sunday to Thursday.
Absolutely. So we had a big move in the Israeli stock market, down 6.4% on the Sunday, trade resuming today. But that was the biggest move in about 3 years. Banks getting hit particularly hard. The Bank of Israel has moved aggressively in the last few hours. So just before the Israeli shekel came back online, they're like, hey, we're going to do an additional level of support. So basically $30 billion in terms of foreign currency availability. Add to that $15 billion through swap mechanisms. So a program of about $45 billion. The Israeli shekel is down about 15% since late Feb. So that is something at the moment that appears to be stabilizing the currency trade. And for the rest of the region, it's very much risk off. Dubai and Abu Dhabi, same deal, picking up on the losses from the prior days, begin to readjust the geopolitical risk premia, which we almost kind of began to wipe out before the weekend.
Yusuf, thanks very much. Bloomberg's Yusuf Gamelladin with the latest market moves in the Middle East as a result of the violence we've seen this weekend. Here's what we're watching out for this week. Today, the World Bank and IMF annual meetings begin in Marrakesh. Central bankers, policymakers and business leaders attending the event will discuss issues of global concern, such as debt relief in emerging economies and the global economic outlook. Tomorrow, we get the latest Bank of England minutes. On Wednesday, the FOMC minutes are released and may shed a light on how much central bankers are leaning towards raising rates again before the end of the year. Towards the end of the week, on Thursday, ECB minutes will be released. They may also give clues about future action. And on Friday, US earnings season begins with Citigroup, JP Morgan and Wells Fargo. So a real focus on the banking sector as we bring the week to a close with those earnings reports. Coming up on the programme, Air France KLM drops after oil prices surge. We'll get more on your stocks on the move. That's next. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
This is Markets Today. We're 12 minutes into our European trading day, and the European equity market picture looks negative, apart from London, which stands out as an area of green. Energy utilities very much behind that trend. Let's get to the individual stocks on the move this morning. Joe Easton has a rundown for us. Joe.
So we're seeing a clear impact from these attacks in Israel on the stock market in Europe this morning. As you mentioned, some UK-listed energy firms rising, notably Shell and BP, both among the best performers. Shell was up around 2% a moment ago, and that higher oil price is also weighing on the airlines as expected. Big moves lower in Air France, IAG, also Ryanair I saw ticking lower, and EasyJet as well, as the higher oil price does obviously mean increased jet fuel costs for those companies. They do try and hedge against a lot of that, but don't manage to hedge it completely, so that is rising costs over for them. And defence also, I saw around 6 or 7 defence stocks jumping at the open. BAE Systems here in London, along with Thales, Dassault Systems, also the Kinetic Q company in London as well. A whole bunch of those shares moving higher as the defence budgets come back into focus following those attacks. On the second board, it's more of an M&A and deals feel to it. Vitesco, we had in stocks to watch. This one getting a takeover offer from the German rival Schaeffler. That is at a big premium. As we can see, that stock jumping around 20%, and Schaeffler dropping, as it would be a big payout for that firm. Euronav, meanwhile, is an oil tanker company. There's a bit of a dispute over the direction of the shareholding in that one. We're seeing Frontline today announcing that they will offload some of their shares to try and resolve that issue. That one ticking higher, and Metro Bank getting a boost following £925 million worth of funding announced over at the weekend. There was a bit of concern around shareholder dilution, but it seems like the impact on debt and the positivity around them securing their financing is boosting the shares at the moment, helping that one to outperform in London. We'll flip over and see what's on the next screen. As usual, I have forgotten, but we've got Croda on the screen here. Now, this is the chemicals company. Another profit warning from this firm. They issued one just around 3 months ago. They're saying today that health and beauty products, they make chemicals that go into moisturizer, that kind of thing. They're saying that demand is weakening. We're also seeing those comments hitting Lanxess as well, the German peer. They both compete in that chemical space. Chemicals could once again be a focus for the earnings seasons that's coming up. Over in football, we've got Juventus on the screen. Now, they are doing a £200 million share raising, according to our reporters on the sports business desk here. They had a good result at the weekend on the pitch, but their debt worries are mounting once again after they reported a €140 million loss in their latest financial report. So that one is sinking in Milan. And just one broker move to point out today, Barclays is going overweight on Lonza. This is the ingredients company. They supply the nutrition sector and make chemicals over there. They've now got 23 buy ratings, so it must be doing something right. And that one is rising 0.3% over in Zurich.
Joe, yeah, a lot of chemicals companies then in focus for very different reasons. Thanks very much, Joe Easton from our equities team with a briefing on some of those stocks on the move. Let's bring into the conversation Annika Trion, who's Chief Economist at Van Lanschot Kempen and joins us now. Annika, very nice to have you with us. A complicated morning when it comes to market moves because, of course, dealing with everything that's happening in the Middle East. I suppose from a global economist perspective, the thing to focus on is what we're seeing in oil prices. And oil prices going higher, this perhaps creates some concerns around inflation, and we've got a lot of that already, haven't we? And certainly, given the strength of the US economy, some of those concerns from last week, linger into this week. What do you see on the inflation front, given what we're seeing on oil prices?
Definitely, Anna. From an economist perspective, this is just adding further risk and further pressure to the stickiness of inflation that we're dealing with, and indeed, the oil price inflation that we are talking about. And it just adds concerns to this persistent stickiness rhetoric of inflation. And that's exactly why all central bankers continue to be extremely conservative, that the inflation fight is not over yet. And this is another example of it.
The inflation fight not over. And given the data we had, Annika, at the end of last week, the strength in the payrolls number, do you now expect the Fed to hike in November? Some are saying that is the difference that this piece of data makes. Of course, we've got CPI due out this week, so perhaps we wait for that.
Yeah, so I think the two most important things, especially looking at whether or not central bankers will hike, is two things. Number one, it's the oil price creeping up again, another pressure on that. We've just discussed it. And number two, what's happened to the bond markets. And it's all about this one question. Are bond markets doing the work on behalf of the Fed? You know, the 30-year mortgage rate in the US is up 100 basis points since the Fed's last hike. That's a huge movement without the Fed doing anything incremental. Or has the Fed lost control on the bond markets? And we need to figure that one out, because if it's the first one, that could indeed allow the Fed to not have to hike again, because the tightening work has already been done. If it's the second option, which is the Fed has lost control over the bond markets, we've got a bigger problem. Because if the Fed has lost control over the bond market, that's basically saying that the market doesn't believe that the Fed is able to control inflation. So that's what makes it really fascinating.
Right, and I guess we might get some insights into that fascinating question, Annika. This week, when we hear from Fed officials, we've had a little bit of recognition of the tighter financial conditions from Fed speakers, such as Mary Daly at the end of last week, but not much more than that. Are you expecting more Fed speakers to acknowledge the tightening that we've seen from the bond market and therefore to draw a link with less need for hikes? Or do you think, given the strength of the labour data last week, actually, the Fed will be happy for the market to be assuming further hikes?
Yeah, well, I think what the Fed has done consistently in the last 12 months is consistently remind the markets to not be too optimistic about the Fed making a U-turn, about the fact that the inflation fight is over and we can even cut rates again. And that's the only thing that's been consistent from the Fed. And we saw that again last month. So we would expect that continued commentary would be along that course, along that path, especially with the latest information we're getting about the risk of oil prices surging. So that will probably be the focus.
That would be the focus. In terms of the European economy, Annika, not so much on the radar at the moment. A lot of background expectations for weakening of the European economy. We see the euro seems very happy, putting up little resistance to the strong dollar today, but we are seeing that with other currencies as well. But down 0.5% on euro dollar at 105.30. I mean, how negative does the story for the Eurozone get, Annika? Our last guest saying there was too much negativity, even though they were expecting a recession.
Yeah, so what's fascinating is Europe, you know, looking globally, Europe has always been a bit of the unloved child in terms of sector allocation, underweight Europe versus US, etc. If you look at it objectively and you look at the valuation of European equities, they are extremely cheap, especially compared to the US. If you look at it in terms of equity risk premium, so the yields you get on equities versus bonds, it's the same thing all over again. The issue is the lack of growth. And that's, you know, the economic growth picture that we're seeing, where the US is much stronger than Europe. Emerging markets, you're also seeing exciting things here and there around rewiring of global supply chains, etc. But the interesting thing that will probably be spoken about more and more is the focus on industry. And I think what you're seeing again with oil price, what you're seeing more and more coming up, which is the scarcity of commodities, also needed for this green transition, for climate change, etc. Europe is an industry place. So it's a sort of double-edged sword. On one hand, we lack the growth, we lack the tech, we lack the AI, we lack all the exciting stuff. On the other hand, industry is what's needed more than ever before, at least in the last 10 years. And it's in Europe. That's where you can find a lot of it. So it's not as straightforward as it used to be, which is, you know, ignore Europe and move on.
Annika, thanks very much. Thanks for your thoughts. Annika Trion, Chief Economist at Van Lanschot Kempen, with her thoughts on the global economy. Coming up, Germany's ruling coalition suffers major electoral defeats in 2 key states, piling pressure on the government of Olaf Scholz. We'll get an update on the weekend developments in German politics next. This is Bloomberg.
race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas and I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything. This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg.
The ruling coalition in Germany has suffered a stinging electoral defeat, well, two, in fact, in two economic powerhouses over the weekend. Let's get an update from Germany. Bloomberg's Oliver Crook in Berlin has a briefing. Ollie, good morning. So local elections in two German states. Take us through the outcomes.
That's right, 2 of 16. It's about 27% of German GDP, so economically significant Bavaria and Hesse. And this was sort of seen as safe CDU, you know, Merkel's party territory where they were going to take the vote. They each took about 35% of the regions, which made them the #1 party. However, as a litmus test on Scholz's government and the coalition there, it was a very poor outcome. Each of the parties lost ground in both of the regions. The Greens did the worst. The FDP, they may not even make it to local to parliament, the Liberals. And Scholz himself in Hesse, his candidate there is his interior minister, who is in charge of, among other things, immigration. And that's where we saw the biggest gain was the far right, the AfD, Alternative for Deutschland. So it really turns up the pressure on Scholz, particularly on the issue of immigration.
Okay, so the focus on the domestic politics, but keeping an eye on the international scene. Scholz spoke with Netanyahu, we understand, over the weekend. What has been Germany's response to the attacks on Israel?
That's right. And Scholz's message has been very clear, very simple, which is solidarity with Israel. Right behind me, the Brandenburg Gate, we saw thousands of supporters of Israel coming. We saw it illuminated in the Israeli flag in colors, the flag flying at the Chancellery and the Reichstag. And we've seen increased security on the ground here in terms of Jewish sites within Germany. And we also saw some protests, sort of pro-Palestinian in the southeast of Germany, that the southeast of Berlin, I should say, that the police came to, and they said that they disbanded due to repeated anti-Israeli and violence-glorifying shouts. This will all set the stage for Macron and Scholz, who will meet later today in Hamburg. We'll probably steal the stage, and we'll hear from them at 5 p.m. local time.
Okay, thanks very much for that. Bloomberg's Oliver Crook with a briefing from Germany. Coming up on the programme, we'll turn to the commodities market. We're seeing, of course, oil prices go higher as a result of the war in the Middle East. Marcus Garvey joins us. We'll talk commodities next. This is Bloomberg.
politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience would get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Markets Today. We're 30 minutes into your European trading day. Here are your top stories. Israel and Hamas at war. The deadliest attack on Israel in decades enters its third day. Oil surges as much as 5% on fears of a supply shock as risk sentiment sours around the world. World leaders condemn the violence. The US says it's sending military support to Israel, while Saudi Arabia calls for de-escalation. We will bring you the very latest from the region. Let's get to the markets, though, and show you what we're seeing on equity markets right now. So we are, as I said, half an hour into the European trading day, and we see the FTSE 100 is flat. Elsewhere, getting more of that risk-off sentiment that you'd expect to see on a first day of trading after such momentous events in the Middle East, such a ratcheting up of tensions and war very much to the fore. So the DAX down by 0.7%. Stocks Europe 600 broadly then down by 0.4%. The difference with the FTSE, and the reason we see it, of course, in positive territory, will be surprise to very few people, but it's the energy markets that are having an impact there. So energy stocks up by 1.6% across the European region. Let's have a look at the sectors, and you'll see that coming through. So energy stocks are an area of strength. Utilities also an area of strength, and that also plays to some of the strengths of the London FTSE 100, where we see people seeking the haven qualities, perhaps, of some of those utility names. Food also doing not too bad, but elsewhere we see equity markets under pressure. Retail, consumer-facing stocks, some industrials are weaker, but that's a mixed sector as well, because we see defense stocks going higher this morning. So defense is higher, energy names are higher, but then we see aviation stocks, consumer-facing stocks, retail moving lower this morning. Let's check on the oil price. I've mentioned how energy names are higher in terms of equity markets. Well, all of that comes through from the higher oil price this morning. So the Brent price at 86.93, up by 2.8% as a result of tensions fueling fears around what that does to the supply of energy. So that is what we see on Brent and WTI. WTI also up by 3.6%. Let's get some of the other top stories that we're covering across the Bloomberg terminal this morning. The Afghan government says the death toll from a 6.3 magnitude earthquake and aftershocks in the country's west has risen to more than 2,000, with about 10,000 people injured. According to the US Geological Survey, the epicenter of the earthquake was near Herat city and was followed by strong aftershocks, including another one measuring 6.3 just half an hour later. ECB President Christine Lagarde says the IMF has cut its forecast for global growth, but not for the US. The IMF's latest outlook is due to be published tomorrow. The current global forecast is for 3% growth this year and next, with US output rising 1.8% this year, 1% next year. Lagarde also said the ECB will succeed in bringing inflation back down to its target of 2%. A bipartisan delegation of U.S. senators arrived in China on Saturday, with Majority Leader Chuck Schumer saying America seeks competition and not conflict. The senators met the Shanghai Communist Party secretary after landing early afternoon. Besides holding talks with senior officials in the city, they will visit U.S. companies in Shanghai before heading to Beijing, where the delegation is expected to meet the President Xi Jinping.
Many of our constituents feel that in instances China does not treat American companies fairly. When we talk to our American companies, they bring this up, including many of them that are here. And we share some of those feelings, and it affects America's view of China. But the bottom line is that I think we can both strive to achieve a level playing field as we compete economically.
In UK corporate news, Metro Bank has secured a £925 million financing package, a deal which imposes a 40% haircut on some bondholders. The agreement sees the Colombian financier Jamie Gilinski take a controlling interest in the British retail and commercial bank. Metro gains some much-needed breathing space after a tumultuous week that saw its share price whipsaw. Let's get back to the commodities news flow. Oil jumped this morning after the Hamas attack on Israel threatened to inflame tensions in the Middle East, which is the source of around a third of the world's crude. While the latest events in Israel don't necessarily pose an immediate threat to oil flows, there is a risk the conflict could spiral into more devastating proxy wars embroiling the US and Iran, and the role of Iran as oil supplier also in question. Marcus Garvey joins us, Head of Commodities Strategy at Macquarie. Marcus, very nice to have you in studio with me. Thank you so much for coming in. So let me start with oil markets, because of course this has an impact on the commodities complex more generally. We are seeing oil prices firmer this morning, up by 3% on WTI, 2.7% higher on Brent. What's your assessment of what risk there is to oil supplies in the region as a result of this war, the attack on Israel and then the retaliation into Gaza?
Well, I think at this stage, the price response that you've seen is quite understandable and proportionate, just in terms of putting a bit of risk premium in. So the initial jump, give or take 5%, and a bit of a pullback. It's evidently too early to have a very high conviction view on what the potential disruption is. People will draw parallels to the early 1970s Yom Kippur War. That's probably, with the following embargo, your extreme case. Quite plausible that actually you get no meaningful disruption, and then it's also worth bearing in mind that at the moment, given the cuts that you've already got from OPEC Plus, really Saudi Arabia, there is actually some spare OPEC capacity in the market. So I think to really assume you need to price in a significant disruption, it's far too early to call that.
Yes, one of our colleagues, Javier Blas, writes about the oil industry, and he was writing an opinion piece about it being 50 years since the Yom Kippur War, and saying obviously this invites parallels, but to your point, suggesting that those parallels are really limited, and the backstory, the supply and demand dynamics, everything else about the story is really different. Is there anything we take away from that period, or is it just it's not instructive to look back to that?
I think it's instructive if you want to look to something that would be your kind of tail risk scenario, but exactly to the points that you make about it is a different dynamic. Clearly, since then, you've had a complete change in terms of the proportion of global oil supply that's coming from the Middle East with the rise of US shale. And also, if we just look at the underlying balance for the market at the moment, in our view, coming into this Q3, we've had a deficit in the global crude market, but actually for Q4, the market looks pretty balanced to us. And of course, we're not even back at prices in oil that we were last week. So there are also other factors driving this in terms of concerns around global growth, what we've seen in terms of the move in gasoline and refining margins recently. So I think it's too much to say that this is a single issue in the market. There's other stuff clearly going on as well.
Absolutely, and I want to get to some of the other stuff, and I want to talk about other commodities as well. But just to linger at one more question on this front, if you like. There had been talk that some Iranian oil, despite embargoes, was getting into the market, and that the US sanctions regime was not being enforced entirely fully. That's what a lot of our reporting had suggested. I guess this does then, in terms of Iranian flows, this does raise questions about whether they continue to find their way into global markets, or does it not affect that?
I think, again, probably too early to make a specific call, and obviously there has been some reporting around potential Iranian involvement in what's happened over the weekend. The degree to which that's true, I can't make any comment. But I think it's the natural point of focus, because if we're going to look for where a supply disruption may first come from, I think that's the first country to which people are naturally going to turn, given that backdrop of uncertainty. And exactly to your point, if we look at media reporting, and if you look at things like ship tracking, there has been a slight push towards more Iranian oil coming into the market recently. So at first place to look for where you might lose some barrels if you're going to consider that risk.
So we continue to ask questions along that front. Before the events of the weekend, of course, we'd seen a real whipsawing of what was going on with oil prices. We rallied up to 95 on Brent. We came down to the low 80s on Brent at the end of last week, as if we'd suddenly pivoted from worrying about tight supplies to worrying about demand. Where does away from the developments over the weekend, where is your focus along that sort of continuum, I suppose, when it comes to oil?
So I think, excuse me, twofold really, in that you clearly have the tightness that we have had in the market in the third quarter. Do you think that it could get tighter than that in terms of what we were pricing at the highs? In our view, the balance of risks was no, with the two aspects of that being one, in terms of incremental supply, you both have actually very strong US shale supply growth. That was heavily discounted a year or so ago. We're now actually at sort of plus 1 million barrels a day year over year in shale supply. And then if you also then look at OPEC, did you expect, or say OPEC plus, further cuts? Or actually, as we look into the next year, is the balance of risks that you see a little bit of a backtrack, or even obviously at some point possibly a policy change, get more supply coming there? And then on the demand side, demand has been very robust this year, but given global growth concerns, again, balance of risks starts to look more in terms of the downside skew. And when we look, of course, at what happened last week, I don't think last week's print on implied gasoline demand in the US is actually true in terms of that dramatic a change. Let's not read too much into data that's very volatile.
Okay.
But it evidently illustrates where you've got a risk point in terms of if demand does start to deteriorate and you go into a looser balance where the market's pricing for real tightness. Clearly, that can have a material impact on pricing when you've got significant positioning having built in the market.
Okay, because that really was something of a it did seem as if it was a red flag, didn't it, around demand for commodity products in the United States, people asking questions about the strength of the consumer and whether we were at a turning point. Okay, so maybe don't worry too much about that, but maybe Chinese demand has been a focus for markets. I know we're heading into LME week this week, and a lot of the reporting around this perhaps going to be around Chinese demand, also around the green transition. What is front and centre for you, Mark, this week?
I think in the very short term, it is Chinese demand and then also really ex-China demand as well. We can't just put it on China because the global growth dynamics are now so divergent. Obviously, we've had a relatively weak China this year. Europe also has been soft, but obviously the US has been robust. And how does that net out between the different regions in the short term? And then, of course, thinking more positively when we look medium term, I think that structural thematic around the energy transition is going to be the major focus. And then that will bring back in this question about supply, where in our view, if you look at concerns around supply, both actually to those points on oil, but also very much on the metals, narratives of underinvestment, in our view, have been overplayed in terms of their short-term market dynamics. If you look medium to longer term, then, of course, you have a bigger question.
Do you? That's interesting, because I noticed you said you thought that had been overplayed. You do think, though, that there is underinvestment, is there? I mean, I'm thinking of some of the commodities, some of the metals that are crucial to the transition, EVs, for example.
Yeah. I mean, if you look at something like aluminium or copper on a 3 to 5 year view, you clearly have a structural deficit in that market. How does that resolve? Part of that is that you do need more investment in new primary supply, but let's not pin everything on that. You should also get additional supply from secondary in terms of scrap. And then we really need to think about demand destruction. How much can you bring down the intensity of use? How much copper per EV can you reduce? That's going to be largely a function of price. So that we also need to think about how you can see substitution to other materials and thrifting down over a multi-year period. So I think, yes, you need more investment, but let's not pretend that's the only thing that drives how the market rebalances.
Okay, Marcus, thank you very much. Good to get your perspective on oil and beyond. Marcus Garvey, Head of Commodity Strategy at Macquarie. Coming up on the programme, more on the latest on the Israel-Hamas war and the possible ramifications for the region. We'll get a briefing next. This is Bloomberg.
Obviously, we were trying to create shoes for me to wear in the Olympics, and that was happening pretty quickly. And then just understanding a new industry and how shoes are even made. But as we went down that path and started to just learn and research more, we learned that shoes have not been made for women. What that means is a shoe is made off of a last, which is a mold of the foot, and it's the mold of a man's foot used to make women's sneakers. And I think it took time for us to really grasp that, because, you know, we've been in shoe stores and we've gone to the women's section and it's like, no, there are shoes for women. Like, what's this over here? And then to really understand, like, all of that is marketing. This is just a man's shoe, like in a different color. And so that kind of eye-opening experience was just like, okay, we got to do this. And even more than making the shoes, like, there's a deeper purpose here. Like, women deserve better and we shouldn't be an afterthought.
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the US and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
This is Markets Today, 44 minutes into our European trading day, and European equity markets are negative, in particular in Paris and Berlin. A little bit of resilience in London, but even that in negative territory now. Energy, utilities, those stocks catching a bid. Defence stocks, of course, getting a bid today as a result of the dire geopolitics in the Middle East over the weekend and the war that is now ongoing. Stocks Europe 600 then down by 0.4%. Let's return to our top story. The death toll from the conflict between Israel and the militant group Hamas has topped 1,100 as fighting enters a third day. Israel has pointed the finger at Iran, who backs Hamas, but Western officials have been reluctant to publicly say Tehran was directly involved. Let's talk to Yossi Meckelberg, Associate Fellow at Chatham House's Middle East and North Africa program, to get his perspective on what's happening here. Maybe we'll start with that point and the role, the extent of the role of Iran. Yossi, we have seen congratulations coming from Iranian officials for Hamas, using their words. Those are the words that they've been using. But Anthony Blinken, I notice in the US, saying there is no evidence of direct involvement, clearly ongoing support in a general sense from Iran to Hamas, a surprise to nobody. What do you make of Iran's role here?
Good morning. I think those are early days. Bear in mind, though it looks now eternity, it's only 48 hours since all of this has been inflicted on us. And we need to check the intelligence, whether there was direct, whether in planning and the weaponry and the rest helping Hamas, or it's more about what we know already with helping Hamas and Islamic Jihad in Lebanon, Hezbollah, with providing with the finances and providing weapons and ammunition, so which of course is different. But I think it's very important what you mentioned, congratulating. When there are hundreds and hundreds of civilians, innocent people being killed, some of them in the middle of a party, in a rave party, and what Iran, the only thing it could do is congratulate. It put Iran again as a rogue state, associate itself with, for instance, Russia, that kills many thousands innocent people in Ukraine. And it's also, I think it draws the line in the Middle East between people, yes, might criticize Israel for the occupation, and rightly so, might criticize Israel for the way it treats Palestinians, and rightly so, but also draw the line that the way forward is not killing hundreds and hundreds of innocent civilians and not taking hostages, including an 85-year-old lady.
And we've seen some devastating images on that front over the weekend, Yossi. So the Iranian reaction, perhaps as not a surprise. In terms of the international reaction that we've seen from various countries, have you seen anything, knowing the region and the geopolitics and the complex relationships that exist? Have you seen anything that has surprised you on the international reaction, or is every nation playing along the lines that you would expect?
Most play along the lines that you would expect, but it's actually, it was good to hear, you know, the reaction from Riyadh and from the UAE, which again differentiate between their criticism of Israel policies, and then at the same time condemning the killing of civilians and understanding that this only would prolong this conflict. And I think, unfortunately, we just at the beginning of this military campaign, and this will continue. And unfortunately, a lot also innocent Palestinians, people will pay with their lives. So yes, I think it's time really for the region and the international community. We know that the next days, probably weeks, we'll see a military campaign by Israel, but to already start working on a ceasefire, already working on negotiation beyond this conflict.
Yossi, thank you very much. Thanks for your perspective. Yossi Mekelberg, Associate Fellow at Chatham House's Middle East and North Africa programme. Thank you for your time. Coming up on the programme, we'll get back to UK politics. We'll go live to Liverpool for the UK Opposition Labour Party conference. We'll be hearing from Darren Jones, Shadow Chief Secretary to the Treasury. This is Bloomberg.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Welcome back. Let's get to my colleague, Bloomberg's Lizzie Burden, who is at the Labour Party conference with a guest. Lizzie.
Thanks, Anna. I'm joined by Shadow Chief Secretary to the Treasury, Darren Jones, here in Liverpool. Thanks for making time for me, Darren. The Currys CEO says that the Shadow Chancellor, Rachel Reeves, has had breakfast with any Londoner wearing a tie. And yet, we understand that all it's taken to persuade some companies not to join your new business council is a call from the Chancellor, Jeremy Hunt. Does that show that the Conservatives can still shut you out?
Well, it's pretty desperate, isn't it, that the Chancellor of the Exchequer, who should be trying to get inflation down, turning around the economy, building our infrastructure projects on time and in budget, is taking the time to interfere with Labour Party announcements. It's pretty desperate from the Conservatives, I think.
Well, the other message from the Chancellor at Tory conference seems to have been that nobody should be under any illusions that they're going to be able to live a life on benefits. Do you agree with that message?
Well, Liz Kendall, our Shadow Work and Pension Secretary today, will be saying in her speech that, of course, everybody that can work should work, and that's about making sure that we create good, well-paid jobs across the economy, which means turning the economy around from the failings of the last 13 years.
But should you be using sharpening benefit incentives to get people back into work?
Well, you need to create the jobs and the job opportunities for people, and quite frankly, the ability for them to be able to get there, and that's about making sure that the economy turns, that we get investment in from the private sector into businesses growing in the UK, and that we build infrastructure on budget and on time.
On that investment point, thinking about Labour's borrow to invest plan, it looks increasingly expensive in the current high-yield environment. Are you going to proceed whatever happens to rates?
Well, we're going to be co-investing with the private sector. This is not about 100% public sector borrowing for public sector
it affects everybody.
projects. Of course, but we know, and you'll hear today in Rachel Reeves' speech, that for every £1 of public sector investment, we expect to get up to £3 of private sector investment. Our investment programme is about unlocking private sector investment, building the infrastructure the country needs. It's not about increasing debt for day-to-day spending, which is against our fiscal rules.
OK, just in terms of how you'd raise money, would you hike taxes for hedge funds and private equity?
So we've already announced 3 of the main tax changes that we will put forward at the election. One is on private equity carried interest, which raises hundreds of millions of pounds for our score system. The other is on non-dom status for people that live and work here but don't pay all of their taxes here. And the third is on VAT on private school fees. And that additional revenue that we think we'll get from those taxes will go straight into the health system and the education system.
If it turns out that abolishing the non-dom regime doesn't raise as much money as you expect, are you going to stick to it on ideological grounds?
Well, we're very confident that it will raise the money that we've outlined. If you look at independent assessments of changing the non-dom tax status, they think that that will raise multiple billions of pounds of revenue per year. We've taken a very conservative estimate of around £1.6 billion per year, which we think is very credible.
But if it doesn't raise that money, will you revive it with a different name?
But we don't think that that will be the case, and if it is in a few years' time, you can come back and ask me about it then.
We're about 15 months, we expect, from a general election. You've got such a big poll lead. You've had it for a while. Is there a sense that you needn't announce anything too bold, too radical, in case you rock the boat?
I think our announcements are pretty bold. We're aiming for the highest, most sustained economic growth in the G7. We want to decarbonise the power system by 2030. We have to fix the NHS, which is a huge problem. You'll hear a lot today from Rachel Reeves about building the national infrastructure this country needs. All of those things are pretty bold, big pledges that we are very ambitious for delivering for the country.
Shadow Chief Secretary to the Treasury, Darren Jones, thanks for being with me. We'll hear from Shadow Chancellor Rachel Reeves at 12 p.m. in her speech.
Lizzie, thanks very much. Bloomberg's UK correspondent Lizzie Burden with us from the Labour Party conference there, giving us the perspective of the opposition party and what their plans would be if, as polls suggest, they do find themselves in power in a year or so. That's it for Markets Today. You can get further insights, of course, from the team, and certainly from the Markets Today blog team. If you go to the Bloomberg UK website, you can click through to the blog. You can also type TLIV Go on the Bloomberg terminal. All of that will take you to the Markets Today blog. Of course, more broadly, the focus has really been on the weekend developments in the Middle East. We're seeing that from a markets perspective, that has pushed oil prices higher, that has sent money into Treasury futures, because there's no Treasury trading today, but certainly into European bond markets, into the dollar. The dollar remains a lot firmer this morning, up by 0.5% on the dollar index, the euro down by 0.6%. US futures are pointing substantially lower, down 0.8% on E-minis, as most European markets in the red. This is Bloomberg.
brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. ON's running shoes have a unique look, and so does its leadership team. CFO Martin Hoffman is also co-CEO, and he thinks two jobs are better than one.
How do you balance those two roles?
I feel the CFO makes you a better CEO, and the CEO makes you a better CFO.
Watch Chief Future Officer this Wednesday on Bloomberg.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. Here's what's coming up on today's program. The death toll from the conflict between Israel and the militant group Hamas has topped 1,100 as fighting enters a third day. Oil surged as much as 5% on fears of a supply shock as risk sentiment sours around the world, plus world leaders condemn the violence. The U.S. says it's sending military support to Israel, while Saudi Arabia calls for de-escalation. We'll bring you the very latest from the region. So let's take a look at the European markets map. Again, the focus firmly on what's happening in the Middle East. The main thing that's moving on the back of it is the price of oil. Now, there is nothing to suggest at the moment that we have the intelligence strong enough. This is what our Mark Champion argues in his column today, that there's intelligence enough to make an involvement or a proxy war with Iran and the U.S. But, of course, this is the big concern across the board. We saw a decisive move not only towards gold, bonds and dollar, but other safety havens. So more than 1,100 people have been confirmed dead in violence between Israel and Hamas militants as fighting heads for a third day. The U.S. has vowed to support Israel moving an aircraft carrier strike group closer to the region. The Israeli Prime Minister Benjamin Netanyahu has vowed to strike back against Hamas in Gaza.
Hamas started a cruel and evil war. We will win this war, but the price is too heavy to bear. This is a very difficult day for all of us.
Well, 2 million people live in Gaza, a small strip of land on the Mediterranean, which has been blockaded by Israel for more than 15 years.
Israel cannot wage a full-scale war on a nation, its people, its land, its holy sites, and expect peace in exchange.
Now, joining us to talk about the markets and really the move to havens is Greg Peters, PGIM Fixed Income Co-Chief Investment Officer. Greg, it's always, and I know it's always uncomfortable actually to have to talk about, you know, some of these havens where the death toll on all sides is so huge. But I guess the big concern is that this becomes a proxy war, that this becomes bigger, that this escalates, and we don't really know what the end game of that could be.
No, that's quite right. I mean, first and foremost, obviously, it's quite difficult to talk about. It's a clear human tragedy. But from a market standpoint, I think it does several things. First and foremost, it pushes down global growth, as energy prices are likely to remain higher. At the same time, it pushes up inflation, so it makes central banks in a much more precarious spot. And then it just adds even more uncertainty to the mix. And it's not like we haven't had enough uncertainty to begin with. So there's lots to digest here from a market perspective, but the initial move of safe haven makes a lot of sense.
So, Greg, what does it mean, for example, for the price of oil? Again, I know it's game theory at the moment because we don't know the implications of Iran. We don't know what that means for the Strait of Hormuz, what they have said that they could close off in the past. But are you expecting heightened volatility for the weeks to come?
Yeah, absolutely. And so oil has been really quite volatile the past month, right? We've seen the sharp spike up, it moved down, now it's moving higher again. And no, I fully expect to see energy prices at an elevated level with a lot of volatility around it.
Greg, overall, what does this all mean for treasuries? Again, I know it's difficult at the moment because we're just on the back of a pretty horrific weekend, but longer term, does it have implications for central banks? Does it go back to inflation?
It does. It's hard to interpret at this point, but I do think the trend is still in place, right? If you believe that central banks are in this higher for longer camp and growth remains, reasonably positive, inflation's still coming down, then that means the curve has to continue to normalize. And so this move that we've had, I think, was just a realization that central banks mean what they say, and that rates will remain higher, and there's no reason to have this persistently inverted yield curve. So I think that normalization process is still very much in play here.
Yeah, Greg, are we at the height are we like peak interest rates?
Maybe on the front end we're close, but not on the back end. And once again, if you subscribe to this belief that we're in this, higher for longer, and growth is normalizing as well, or it's stabilizing, and inflation is moving towards trend, then that means the curve should have a normal shape to it, which means it shouldn't be inverted. So I would expect kind of intermediate to long-term rates to move higher here over the medium term.
Greg, what does this mean for fixed income? I mean, it was pretty wild in the treasury markets last week.
Yeah, so I think all else equal, it's a really good backdrop for fixed income. So I know there's been lots of news stories around, 3 straight years of losses, but the flip side of that is that yields are actually much higher, right? And I think from an investing standpoint, earning today's current carry and yield is far superior than where we were 2 years ago. So to me, as prices move lower, yields go higher, of course, and those higher yields are really what fuels fixed income. So I think we're in a really good place, really quite bullish over the medium, longer term.
So, Greg, when you look actually your fixed income portfolio, what do you want to buy right now?
Still the same. I mean, I think it's a high-quality bias, all else equal, right? This higher rate environment puts more pressure on the more levered cap structures, the more levered real estate plays. So, take what the market gives you. And what I think the market is giving you is high-quality carry. And so that's what we're doing. That's what we're continuing to do.
Is there anything in Europe that looks attractive right now?
Europe is less attractive. We have a bias towards U.S., clearly. We think the U.S. is a winner here over the medium to long term. Europe is in a much more tricky spot for a variety of different reasons. So we're definitely dollar bulls and dollar buyers.
Anything in yen? I don't know if further afield, actually, if this is the right time to look at opportunities in fixed income.
Well, the moves in JGBs have really been important, right? So part of the buyer strike that we've seen in U.S. Treasuries, for example, is the fact that 10-year JGBs have really moved up substantially. So I think there's this home bias that is coming into play in Japan. I expect that to continue. But we see better opportunities actually in the U.S. and even Europe than we do Japan at this point in time.
All right, Greg, thank you so much. As always, Greg Peters there, PGIM Fixed Income Co-Chief Investment Officer. Coming up, Israel reads from the deadliest attack on its soil in decades. We speak to Jerusalem's Deputy Mayor, Fleur Hassan Nahum. She joins us next, and this is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
The boundaries of the entertainment world are blurry, and they're all scrambling for the same thing, screen time. And navigating this multiverse is no simple task. At Bloomberg Screen Time, it's culture, business, converged. Bloomberg Screen Time, Naya Studios, Los Angeles, October 11th and 12th. Get your tickets at bloomberglive.com/screentime.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now let's turn back to our top story, where fighting between Israel and Hamas has entered a third day. Now, more than 1,100 people have been killed following the deadliest attacks on Israel in decades. Joining us now from Jerusalem is the Deputy Mayor, Fleur Hassan Nahum. Deputy Mayor, thank you for joining us. It's been a pretty horrific weekend. Have we gotten to the bottom of how this was possible intelligence-wise?
I think that the whole country is still wondering and in shock and in trauma how this could have happened. We don't understand it. We have a border with Gaza. We left Gaza in 2005. There's no occupation. And we really don't understand how a secure border with Israel's technology and Israel's very experienced army, how this could have happened, how they could have come in, gone in people's homes, killed babies in their beds, kidnapped old women. It's incomprehensible, and we're still waking up and hoping it's a nightmare.
Who is to blame for this in terms of the intelligence that was not picked up?
I really can't tell you. I'm not privy to the type of intelligence information, but what I can tell you is that once we get the situation under control, and once we can return the hostages, then there will definitely be inquiries and investigations as to how this happened and how this should never happen again.
Deputy Mayor, what do you think happens next? Do you think that this escalates? I know there's questions about an involvement from Iran, which is not 100% verified yet. I think a lot of people are hoping for the best, but we could see the worst.
Look, first of all, the U.S. is sending troops already to the region, which is a message to Iran saying, you get involved and we'll get involved. And so that's encouraging for us. And I think at the moment, the priority is, first of all, to get the 40 terrorists that are still running around the south of Israel. We need to get them out. There are still gun battles happening with terrorists that infiltrated the south of Israel. So that's the first priority. The second priority, of course, is to stop bringing back the hostages, either by force or negotiation. I really don't know what's best. But Israel, we value life. And every life is important here. And we have to do our utmost to return the innocence. We have to, understand that these terrorists came in to kill innocents. There's never been a situation, there's never been a higher toll of citizen deaths than what we've seen in the last 48 hours in the history of the state of Israel. Normally, combatants are the majority of the killed, and there's collateral damage. In this case, it's been completely the opposite.
Deputy Mayor, there's also a growing number of international airlines that are suspending flights to Israel. What does that mean for Jerusalem?
Well, I'm dealing with the tourists that are stuck here at the moment. We had a big Christian festival last week. We've had Jewish high holidays. There are many tourists that are stuck in Jerusalem that are trying to get home. So that's our first priority. Then, of course, it's the people canceling flights. We can't blame them for canceling flights. And it's also the returning Israelis. We need to get Israelis back home. Many of them are essential personnel who were on holiday, and they're trying to get back home. The Israeli carrier El Al is still, of course, flying everywhere. Some of the foreign airlines are flying, some are not. We can understand that. And so it's a question of getting back our citizens and helping the tourists go home.
Thank you so much, Fleur Hassan Nahum, there, the Deputy Mayor of Jerusalem. Now, for more on the violence in the Middle East, Bloomberg's Stuart Wallace also joins us from Dubai. So, Stuart, what's your assumption about the potential for escalation?
Well, at the moment, there's not been a great deal of evidence that it will happen. Again, I should caution that we are in the very early stages of this conflict. But thinking back to yesterday, we did see some mortar fire coming in from the north, that is from Lebanese territory into territory held by the Israelis. But it was characterized particularly by the IDF, the Israeli Defense Forces, as relatively low level. Again, it's hard to sort of talk in those terms when we're talking about mortar fire. But it seemed to show that there was no appetite, at least for now, for Hezbollah to get involved. And again, as your previous guest said, you have the US deploying to the Eastern Mediterranean, in some respects as a deterrence for other actors to get involved, and again, particularly Hezbollah and Syria. So for now, and I do stress for now, there doesn't appear to be an escalation to other parties, but as you know as well as I do, in these circumstances, things can get out of hand rather quickly.
Stuart, what has the economic response been from Israel and its central bank?
So we've seen this unprecedented attempt to basically prop up the shekel and make sure the liquidity there is there for the banks. In terms of the markets themselves more broadly, we did see a big sell-off in the Tel Aviv Stock Exchange yesterday. That's to some extent being reversed today. But again, because, again, as your previous guest said, the fighting is still going on in the south, and there's no sense that this is going to end anytime soon, I think the economic outlook looks particularly uncertain. Looking more broadly across global markets, we saw, again, a big run-up in oil prices this morning. Now, that has modified somewhat. And again, no evidence so far that this is going to spread, which I think is largely what was driving that move. But we're on day 3 at this stage, and we'll keep watching and waiting for the rest of this week.
Thank you so much, Stuart Wallace there from Dubai. We're also just getting some breaking news from ISNA, which is an Iranian news agency. I'm told it's one of the major news agencies in Iran, saying that Iran has denied claims of involvement in the Hamas attacks. Coming up, we speak to the BlackRock Vice Chair, Philip Hildebrand, on souring sentiment as the Israel-Hamas conflict continues. We'll also discuss the likelihood of a soft landing for the U.S. economy and much, much more. That's next, and this is Bloomberg.
Race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas and I never thought I would see them in.
but I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
So global markets facing renewed geopolitical risk as the Israel-Hamas conflict escalates. Now, the dollar rebounding against most currencies as that risk-off sentiment spreads. Who better to join us to discuss the global economy and much more than BlackRock's Vice Chairman, Philip Hildebrand. Philip, of course, at the forefront of all of our thoughts is always the tragic loss of human life. It also put something in the markets, which is fear of escalation. It put fear on the markets of actually heightened security, where we don't know where this ends. How much volatility are you expecting in markets?
Look, markets will sort themselves out. This is always a typical when something terrible happens. So the first couple of days, there's a lot of scrambling. I think the bigger issue here is this is a manifestation of one of the longer-term sort of forces on the supply side of the economy, you know, linked to the fragmentation of geopolitics. And to me, what this means, it's yet another example of why we're likely to enter a much lower growth era where, you know, trend growth is going to head down, potential growth is heading down in all major regions, with the possible exception of Japan. And so this means this world of stickier inflation, low growth, and high interest rates is more likely to persist. And what we see here is one, in a sense, at the moment, regional manifestation of this fragmented geopolitical system that we're in, very different from the Great Moderation.
But Philip, so could we see, and this really seemingly almost came out of nowhere in terms of the intensity of the attack, and I don't know why a lot of intelligence agencies weren't prepared for it. But away from that, could we see actually foreign policy and, you know, things like this be much more heightened that we're unprepared for?
It's very hard to tell how this could have happened. I'm not an intelligence expert or a security expert. Perhaps the answer lies in, you know, on the one hand, very high-tech defense system and perhaps relatively low-tech approaches to how you evade high-tech defense systems. So I'm sure lots of experts will think about this. I do think it means, generally speaking, this kind of risk premium, in a sense, around geopolitics is much higher than it has been in previous decades. And that, of course, we've known for quite a while in Europe. This, to me, is another manifestation of this and has big implications on the kind of macroeconomic environment we're in, being very different. We call it a new regime, decisively very different from the past.
What did everyone calling for a recession actually get wrong?
I think the recession is less the issue. The reality is we have very subdued growth. If you look at the average measures of GDP growth economic activity in the U.S., you see that the economy has been basically growing at barely around 1% for the last 18 months. We expect that to persist. That will mean we'll have the longest period of very low growth outside of a recession, even if we can avoid a recession. In Europe, we're seeing flatlining activity. So I think the story is less about are we going to go into a recession or not, but much more about the reality that's beginning to sink in, that we have moved to a much lower growth environment than what we've seen in the past.
But do you think interest rates have peaked?
Hard to tell. We're probably close to it at some level. I think the much more important story is that because of all these supply constraints, including geopolitics, but not only, What we're going to see, despite the kind of waning of the pandemic-related distortions that will bring inflation down quickly, I would expect U.S. inflation to be at 2% by mid-next year. But the reality is going to be that, for central banks, this new macro environment will mean they will not be able to cut rates the way they have done in the past. So we're going to see a very different reaction function, lower potential growth, higher rates, higher neutral rates. And so that's going to mean that this classic response to any problem central banks ease aggressively, that is very unlikely to be the play, as it were, in the years to come.
So would that be accompanied by a credit crunch? Right, so savers not being able to pay their credit cards.
We'll see. It's hard to tell. Cracks will show up when you have a very different environment. We are now in a very different environment. Stickier inflation. It will come down, but it'll remain sticky. Probably a kind of semi-permanent bias towards tight policy, higher interest rates, and relatively low growth. That means weakness will reveal itself, whether that's in government balance sheets. It's a story we're seeing in a number of countries, whether it's in corporate balance sheets, in business models, as we've seen in the past in the financial sector. So I think this will be generally an environment where weakness, whether it's in balance sheet, business models, or strategies, will reveal themselves. So there's going to be, I think, great differentiation between economic outcomes, between those that are solidly positioned and those that have fundamental weaknesses.
But Phil, what you're explaining, so the markets hasn't really latched onto that. So what does that mean for if the market reaction function means that actually central banks can't do much? Where do you find value in markets?
Well, I think the market is beginning to look at it. If you look at rate expectations on a forward basis, we're beginning to see that they are basically shifting. I think the main implication is that we are not in a normal business cycle kind of environment. We're going to be in a much more sticky inflation environment, and rates will not be able to come down to respond to weakness. So central bankers, in other words, will be constrained. Yeah. They will be facing trade-offs. And that's a very different world that will manifest itself. And I think that's the most important conclusion we can take away. And what happened tragically over the weekend, to me, is in a sense yet another manifestation of these longer-term structural forces, whether it's demographics, the transition to net zero, or geopolitics.
Philip, thank you so much. Philip Hildebrand, BlackRock Vice Chair, stays with us as we continue to look at economic shocks, geopolitical tensions, and of course, everything else. This is Bloomberg.
Obviously, we were trying to create shoes for me to wear in the Olympics, and that was happening pretty quickly. And then just understanding a new industry and how shoes are even made. But as we went down that path and started to just learn and research more, we learned that shoes have not been made for women. What that means is a shoe is made off of a last, which is a mold of the foot, and it's the mold of a man's foot used to make women's sneakers. And I think it took time for us to really grasp that, because we've been in shoe stores and we've gone to the women's section and it's like, no, there are shoes for women, like what's this over here? And then to really understand, like, all of that is marketing. This is just a man's shoe, like in a different color. And so that kind of eye-opening experience was just like, okay, we got to do this. And even more than making the shoes, like, there's a deeper purpose here. Like, women deserve better and we shouldn't be an afterthought.
From the world of politics to the world of business, Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew, alongside Kaylee Lines, deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
The death toll from the conflict between Israel and the militant group Hamas has topped 1,100 as fighting enters a third day. Oil surges as much as 5% on fears of a supply shock as risk sentiment sours around the world. And world leaders condemn the violence. The U.S. says it's sending military support to Israel, while Saudi Arabia calls for de-escalation. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, still with us, Philip Hildebrand, BlackRock Vice Chairman. And Philip, I know both you and I will go to the IMF World Bank meetings in Marrakesh. A lot of the focus will definitely be on yields worldwide at 5% and what that breaks, what it means for this new economic reality. Do you worry about what a higher for longer 5% yield means?
Yeah, I think it's, alone, yes, of course, any investor has to think that's a different world. It also creates great opportunities. You can, as we've seen, cash has become a very attractive asset class when you can pick up 5-6% over a few months. But I think that the bigger issue that the fund really should, hopefully will frame the discussions over the weekend is how does this new environment of, these sort of three dimensions of stickier inflation, less maneuverability by central banks, lower growth, and higher interest rates, how does that change the dynamics of the economy? And what does that then mean for markets, for people like you and me? I think that should be the framing of the IMF, and I hope they really start to pay attention to these new structural conditions that are underpinning, the global economy, with very few exceptions.
So if you had to put a trade now for the next, let's say, 5 to 10 years that you wouldn't touch, what would you bet on?
I think what we have been telling our clients that you need to move away from sort of the traditional last 40 years bonds versus equities asset allocation framework, 60-40, and move to a kind of much more thematic approach. So, take a few examples. The transition to net zero is going to mean big allocations of investments over the next decades. Security, resilience, the kind of rewiring of globalization in quite a different way. I mean, GDP, trade as a share of GDP, if you look at it over the last couple of years, it's completely plateaued after years and years of, a kind of one-way trend. These kinds of themes, AI could be another one. I think we need to completely rejig, in a sense, the way we think about allocating and investment themes, as opposed to just saying, oh, this is a great environment for bonds or this is a great environment for equities. If we're going to be in a world with lower growth, higher inflation, and higher rates, beta is not going to, in a simple way, give us the returns that many of us need for our clients.
But this is a massive shift, actually, for all of the finance industry.
I think it's it's a huge shift, which is why I would appeal to the fund to really focus these discussions around what does this new regime, these new structural dynamics mean, and move away from kind of being caught in the decade-old, business cycle logic that we have a problem, rates will come down quickly. They won't. And I think we have also a generational problem. Most people in this industry have never seen anything like it. I always joke around the firm when I say, Larry Fink is probably the only employee at BlackRock today who ever really traded bonds on the short side in his career. So there is a kind of a collective memory that is simply missing in all organizations today.
When you look at, what does this mean for currencies? So I know euro, for example, is not off parity. I don't know whether, these shifts, as also a former central banker, this is something that we sometimes, if not misunderstand, understand the significance of it less than we would have 10 years ago.
Yeah, I don't think it has to necessarily mean very much because a lot of these forces are going to be global. There are some exceptions. Japan is in a different place right now. But if you look at the kind of what I said earlier, the flatlining of growth, the very low sort of growth dynamics in the U.S., those kinds of things are happening globally, sometimes for slightly different reasons. But, that tells me that currencies are a relative asset class, something I learned very early on. And so in a world where some of these trends are kind of are all pervasive throughout the entire global economy, or much of it, it doesn't necessarily need to lead to great currency volatility.
Philip, what are you most looking forward to, actually, at the IMF World Bank meetings in Marrakesh? Again, I know a lot of the focus will also be on the ground because of the devastation, because of the earthquake. But we have a lot of the banking community also coming. And I guess, it's still inflation, right, that they'll focus on.
I think they should focus on structural change, whether it's the change from the banking system, migrating much of it or important parts of it to the capital markets, whether it's what does it mean to have this new macro environment that I talked about and not get caught up too much in the old frameworks of day by day, but rather use this as an opportunity to think through. If you look at the articulation by central banks of this new world, there's still a lot of work to do. I mean, the one, I think, that articulated it very well was Christine Lagarde in her speech at Jackson Hole. To me, that has been so far the most honest and frankly, most comprehensive speech by a central banker to try to describe these new forces. So I think we need to get clarity on what we think is going to happen over the next decade, how this new era is different from what we've all lived through, the Great Moderation, and no better place to do this than, through the leading finance and ministers and governors.
Do you think, Philip, that actually the fragmentation, deglobalization of the world continues? Or have we seen, are there more supply chains?
Well, I think, the problem with these supply constraints is some of them we could fix. We could fix relations between China and the U.S. And there's a delegation of senators arriving in China, so there are some perhaps hopeful signs there. The war could be ended between Russia and Ukraine. So some of these things can be fixed by policy, by decisions, by courageous people. Unfortunately, some of the other ones, the transition to net zero, which will lead in the short to medium term to higher energy prices. The most obvious one is demographics. A vastly kind of aging society will lead, absent all other things, to lower growth rates. And these things we cannot really change. And so it's a mixed bag. The forces that are kind of structural and really can't be changed very much by policy are unfortunately a big part of the story.
I think it's actually the first time we also hear from the new PBOC governor that he's on the international stage in Marrakesh. What are you expecting? Again, how should we deal with China right now?
Well, I think that the question there is can they and are they willing to deploy some policy instruments, and they have them, to create easier conditions.
Yeah.
They don't have an inflation problem per se, so they could, but of course they've got structural financial system problems that probably will constrain them also in deploying these policy tools. And I would expect, frankly, to have a fairly consistent approach relative to the previous governor. But that will be interesting to see if anything changes as a result of the change at the top of the central bank. The central bank, in my experience, and I've known the last two governors very well, has always been very professional, very sophisticated, very competent, and I would expect that to continue. Whether we'll see a change, I would doubt it, but we'll see as we hear what the new governor has to say.
Philip, thank you so much, as always, to also get us started for our IMF World Bank coverage. Philip Hildebrand, there, the BlackRock vice chairman. Coming up, oil higher after Hamas's surprise attack on Israel, stoked supply concerns. We'll discuss that next, and this is Bloomberg.
the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the U.S.
Nobody covers business like Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is a Pulse. I'm Francine Lacqua here in London. Now, oil gains on fears that the worst attack on Israel in decades could roil the wider Middle East, home to almost a third of global supplies. Well, Bloomberg's Youssef Gama Eldin joins us now with the very latest. Youssef, big moves on the oil price. Now, this is not because there's an immediate threat to it, but actually if there was a proxy war involving Iran and the U.S., then I guess all bets are off.
100%. So this is all about Iranian oil exports, which made a bit of a recovery so far this year. In fact, all the incremental barrels are coming from Iran. So we're talking about 700,000 barrels per day. But as RBC and many others in the notes that I've gone through, so Goldman Sachs has chipped into this as well, and Citi, basically, if the United States sees Iran as responsible in the attack, then those oil exports could come back down, creating an even tighter market. And then OPEC Plus, they're also not looking like they're willing to move. So we heard from the UAE energy minister, the Saudi energy minister late yesterday, and they weren't willing to talk about politics. They say OPEC Plus is unified and they will act as they need. See.
Yeah, and Iran in the past has also threatened to close down the Strait of Hormuz, right? And that's the passage for a lot of cargo shipments and a lot of oil shipments, not only Iranian oil.
Absolutely. So, I mean, this is something that's, come and gone over the last 2 to 3 decades. And the scale of the amount of energy that flows through the scale of Hormuz, to the tune of 17 million barrels per day, if it comes to an Iranian involvement, which maybe might be in response to any attack on southern Lebanon, then you would have potentially some problems there, although the UAE and Saudi Arabia are going to be very keen to do what they can politically to make sure that it doesn't go that far, because they've invested so much in their respective economies, be so much to lose.
Youssef, thank you so much. Youssef Gama Eldin there with the very latest on oil. Now, the international community is also weighing in as the fighting between Israel and Hamas continues, with hundreds of Israelis and Palestinians killed since the conflict began on Saturday. Let's go straight to Bloomberg opinion columnist Mark Champion for more on this. Mark, you have a smart and measured column out today. What's your take on the latest escalation of the conflict between Israel and Hamas?
Yeah, well, I think, Israel's in a really difficult position. Hamas conducted this attack with maximum brutality and, put it on camera. So they know that Israel is going to attack Gaza, and that has to be part of their plan or their planning. It's now up to Israel to figure out, how do we do that? How do we achieve what we have to achieve when Hamas not only holds, more than 100 hostages, but also, expects us to do, to make this attack, and then what happens elsewhere? What happens with Hezbollah from Lebanon? What happens with, Iran? How do we avoid this becoming a wider war? Very, very difficult.
So, Mark, your latest piece says the Prime Minister, again, has set out a good framework for Israel to respond. Tell us more about the plan. And I guess what you're saying is that, if it's not measured, then how bad could everything get?
Yes. So essentially what he said was, first of all, we need to clear out the remaining Hamas fighters from, the border area, secure the border. So that's clear, that's doable, non-controversial. Then the next thing is to exact a price on Hamas. And so that's a quite flexible, term. It leaves them, a lot of maneuver room for just what that price is. And he says it will, include going into Gaza. That's inevitable. But at the same time, he says that we need to, secure our borders to make sure that, we don't have other parties, moving into the conflict. So that it shows that they seem to understand it's a balance that they need, that there is this risk of escalation, which is quite real. And then finally, unity within Israel. It's been extremely divided recently, and a level head, which, all of which is exactly what they need to do. Whether they'll be able to, given the nature of what Hamas has done, is really very, very difficult. I mean, it's a tough proposition.
Mark, what happens next? I know it's difficult to call out exactly how it will go. We heard from the Jerusalem Post that the Israeli army plans to call up to 300,000 reserve soldiers. Like, what do we know about Iran and China and all of this?
Well, what we know about, China has simply said, as it always does, we call for de-escalation, etc. And there's no particular reason to think that China's, had a hand in any way. Iran, on the other hand, is an important financial backer of Hamas. There are reports already that Iran, at the very least, discussed and gave a green light to what was going to be done. Iran has a clear motivation in the sense that Israel was close to striking a normalization deal with Saudi Arabia, Iran's kind of main rival historically in the region, and so that both there was a kind of meeting of interest for Hamas, which had been the Palestinians have been marginalized by this normalization process, and Iran, which also stood to lose. We need to really make sure of exactly what Iran did, because the implications, if Iran orchestrated it and was materially behind it, that those implications are quite severe. You could then be talking about a confrontation between Israel and Iran, which likely would draw in the U.S. That has enormous implications politically for the number of fatalities that you're going to see, and for things like the oil price.
Mark, as always, thank you so much. Our Bloomberg Opinions, Mark Champion, joining us. And I would urge everyone to really go and read his terrific column from this morning. Now, coming up, we'll also be live in Liverpool for the UK Opposition Labour Party Conference. That's next, and this is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the US and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
Now, Metro Bank shares are higher after the company secured a £925 million finance package deal, which imposes a 40% haircut on some bondholders. Now, the agreement sees Colombian financier Jamie Gilinski take a controlling interest in the British retail and commercial bank. Now, Metro gains some of much-needed breathing space after a tumultuous week that saw its share price whipsawed. Now, Bloomberg's Tom Metcalf, who oversees all of our finance coverage here in London, joins us. Tom, I know it's kept you busy over the weekend. This was a huge deal. It was kind of like on the brink. It wasn't. Now it has a lifeline. What could it go? What went wrong at Metro? Could it go wrong elsewhere?
Yeah, it's been a frantic weekend, so apologies if I make even less sense than normal. But no, it is a big deal for UK banking. I think it's, to your question, is there sort of kind of more sort of, contagion or anything like that as a result? That doesn't seem to be the case. Very idiosyncratic things were happening at Metro Bank. There's various reasons investors had kind of been spooked over the previous month or so. And I think, what we are seeing is a new Metro Bank emergence. Now Gilinski has will have a 53% stake. That's up from about 9%. And it's interesting that really, over the weekend, there's all sorts of sort of rumours and stories flying around. Might there be a white knight? Ultimately, what happened is the existing investors were, effectively made the decision they will go in, retain some kind of control, etc., and put a lot of more money in the bank.
So what does this mean for Metro going forward? Do we have a blueprint of how it could change after that lifeline?
So in the statement that they released last night and then updated today, all the messaging was like, we've been in the bank for 3 years, we sort of see the strategy working, now we've got a bit of breathing space. So I don't personally see any immediate changes. But what is interesting is, why is Metro Bank different? It's because of that big branch network, which is very glitzy, very expensive to run. And I guess that is one question, is do they try and save costs somewhere by perhaps sort of rowing back on the free dog biscuits, for example, that they give out there?
Tom, overall, what was the most surprising thing, actually, in how it unfolded so far? It's been, again, a pretty tumultuous 7 days for them.
Yeah, exactly. I kind of jinxed myself on Friday. I was telling people, I don't think anything will happen this weekend. And then, by Saturday, I realised the error of my ways.
That's a rookie mistake.
Yeah, I know. It's silly. I think in part, maybe the speed. And for me, the most fascinating thing is all this current episode really came from the PRA telling the bank, we're not going to, let you use your internal modelling. And it's just such an intriguing situation because obviously you've got the PRA saying that for good reason. But at the same time, they don't want a bank like Metro to hit trouble. So they were in a kind of intriguing situation there. There's that dynamic. What did they want to see in this situation? And then, of course, huge amounts of new money going in. Shareholders, bondholders reacting positively today.
Yeah.
But, what does the future hold? And that's an open question after a couple of years.
Tom, thank you so much. Tom Metcalf there, who oversees all of our finance coverage here in the UK. Now, UK opposition leader Keir Starmer has kicked off his annual party conference in Liverpool as he attempts to portray the Labour Party as a government in waiting. Well, Bloomberg's UK correspondent Lizzie Burden joins us from Liverpool. So, Lizzie, I know he talked about Israel, which we'll get to in a second, but basically this is a blueprint of then his campaigning into the election. What have we learnt from Labour?
Yes, Francine, this is the opportunity for Keir Starmer to set out his stall, as you say, ahead of the election that we're expecting in 15 months' time. This is business day at Labour Party conference, even though they need to present if they are to hang on to their double-digit poll lead, about 20 points as it stands. So Keir Starmer's message to his party is going to be to keep focused and not to sacrifice that lead in the polls. But I was speaking to Darren Jones, the Shadow Chief Secretary to the Treasury. I asked him, given they've had this poll lead and given they've had it for so long, are they going to be complacent? Take a listen.
Our announcements are pretty bold. We're aiming for the highest, most sustained economic growth in the G7. We want to decarbonise the power system by 2030. We have to fix the NHS, which is a huge problem. You'll hear a lot today from Rachel Reeves about building the national infrastructure this country needs. All of those things are pretty bold, big pledges that we are very ambitious for delivering for the country.
So we're going to hear more about infrastructure and investment from the Shadow Chancellor in her speech. Back to you, Francine.
Yeah, it hasn't been, of course, a Labour Party without controversy in the past when it came to anti-Semitism and things like that. What's been Keir Starmer's reaction to what's happening in Israel?
Well, he's condemned the attack by Hamas in the strongest terms. He's said that it's appalling. And actually, behind the scenes, even though this is dominating the conference on the first day of the week, actually his aides say that he's pretty sanguine about it. It really does underscore just how far the party has come since the leadership of his predecessor, Jeremy Corbyn. You'll remember Jeremy Corbyn, before he was Labour leader, was happy to share a platform with some of the supporters of Hamas and Hezbollah. And even on Friday, Jeremy Corbyn posted on X, emphasising the impact of Israel's occupation and passing up the opportunity to condemn the attack. So it's against that historic backdrop that Keir Starmer has returned to this more traditional foreign policy stance.
Thank you so much, Bloomberg UK correspondent Lizzie Burden, with the very latest, of course, from the Labour Party conference. Up next, Bloomberg Brief. This is Bloomberg.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others.
Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television. These CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. ON's running shoes have a unique look, and so does its leadership team. CFO Martin Hoffman is also co-CEO, and he thinks two jobs are better than one.
How do you balance those two roles?
I feel the CFO makes you a better CEO, and the CEO makes you a better CFO.
Watch Chief Future Officer this Wednesday on Bloomberg.
Are you ready to trade Bitcoin?
This is Bloomberg.
Today, the people of Israel are under attack, orchestrated by a terrorist organization, Hamas. In this moment of tragedy, I want to say to them and to the world and to terrorists everywhere that the United States stands with Israel. We will not ever fail to have their back.
Israel and Hamas at war. The death toll tops 1,100 as fighting enters a third day. The U.S. says it's sending military support to Israel, while Saudi Arabia calls for a de-escalation. Oil surges and safe havens gain. We'll look at the implication for markets as investors now face a fresh dose of geopolitical uncertainty. And risks abound as China returns from Golden Week break. Xi Jinping will meet his U.S. senators in Beijing as Senator Chuck Schumer blasts Beijing's response to the Israel-Hamas conflict. A very good morning. Welcome to Bloomberg Brief. I'm Manus Cranny with Danny Berger in London. Danny, we are facing open-ended geopolitical risk. That is the view. And if you look at the equity market this morning, what you have is, again, a flush into dollar and into oil. But these S&P futures are down just by a tiny amount this morning. The risk is this: will the Fed have to cap what they are doing as a result of this open-ended geopolitical risk? John Arthurs this morning says Gaza won't hamper markets unless Israel hits Iran, and that is the wild card according to Halima Croft. Oil is up 3% at this junction. We were up 5% in the past couple of hours. Halima Croft at RBC says Iran remains the big wild card, and of course warships are on the way closer to Israel from the United States of America. All eyes will be on the Strait of Hormuz, and of course we begin to tick over in our mind, what does all of this mean for Saudi, Russia, unilateral cuts? The absolute natural haven that is taking the bulk of the haven status today is the dollar, up 0.25%. It undermines pretty much all the other currencies. Sterling is down. You've got the euro under pressure. Money flows slightly into the yen. Danny, good morning. Open-ended geopolitical risk is what we need to assess in the next hour.
And at least the first blush response, Manus, is that textbook haven trade. The risk off, it's not just happening in the dollar, it's happening in treasuries. One thing that is helping to dampen volatility is the fact that it is a holiday in the U.S., so cash trading for the treasury market is closed. Still, we're getting a bid into futures. We're getting a bid into global bonds. In fact, Manus, to your point as to whether this caps the Fed, we've seen a round trip in this treasury market. We are back at the levels we were before that Friday. Too hot to handle jobs report support data. Now, I also have some Israeli assets on my board. The shekel is weakening. It is at its lowest level in 7 years, down by about 2% versus the dollar. Of course, you have two things at play also because the dollar's acting as a haven currency, but that's occurring even though we did have the Bank of Israel stepping in with about $45 billion worth of support, $30 billion of that coming in the form of selling FX, the rest of that coming in the form of swap mechanics to help give liquidity to this market. Finally, Israeli stocks, they have taken a pause from the worst of the sell-off that we've seen still over the past 2 days. They're down about 6.5%. Manus, that is the worst sell-off for Israeli stocks since the beginning of this year.
Well, certainly the central bank stepping in to the FX market is a big moment. To the Prime Minister of Israel, Danny, Benjamin Netanyahu has declared his country is at war.
Hamas started a cruel and evil war. We will win this war, but the price is too heavy to bear. This is a very difficult day for all of us.
Joining us now is our Bloomberg Istanbul Bureau Chief, Honor. And Honor, what is the potential for escalation? I quoted Halima Croft. She's talking about the risk with Iran, the conflict. What is the risk of escalation between Israel and Hamas, as well as other parts of the region, specifically Iran?
In terms of Hamas, Israeli military authorities have said that they are going to dismantle Hamas's military infrastructure in Gaza, and that's going to be an operation that's likely to have a massive ground incursion element, which means it will take a very long time, if not months. But outside of Hamas, the appetite for escalation in tensions between Israel on the one side and Iran and its proxies on the other side has been limited so far. Just yesterday, there has been some shelling, some mortar fire coming out of Hezbollah in Lebanon in the north of Israel. But Israeli authorities also said that that shelling has been somewhat less aggressive than what they would have expected. But now, having said that, I think the single most important thing to point out at this point is that it's still day number 3 since the Gaza militants' attack against Israel on Saturday. That means it's very, very early to say that this is not going to escalate into a sort of a shadowy war between proxies of Iran on the one side and Israel on the other.
Honor, it still might be early, but we've had a variety of responses from different nations. That includes U.S. Senator Chuck Schumer being very critical to China in their response. He's in China now. CCTV says that she and Schumer will meet. Who are likely to be the peace brokers in this conflict, and how do you assess their chances of success?
Right now, all the countries, especially in the region, stand to lose a lot from a prolonged conflict and higher tensions between Israel and possibly Iran on the other hand. So they have all shown willingness to engage in dialogue, and especially countries such as Turkey, Egypt, and Qatar have expressed interest in brokering some kind of dialogue between Israel and Hamas. But again, it's very early to gauge the chance of success for any of these initiatives. Even Hamas itself doesn't seem to have a full grasp of how many Israeli hostages it has, where exactly they're being held. So without that kind of clarity, it's impossible to have any of these countries to have a meaningful contribution to what might be a dialogue between the parties that might end in a cessation of hostilities.
Honor, thank you very much for that. That is Bloomberg's Honor Ant. All right, let's take a step back. On global risk, we've had this clear haven response, as Manus and I walked through. Joining us now is Callum Pickering, senior economist at Berenberg. Callum, it's one of these difficult situations. That understates it. It's this global event, this risk event, clear response in markets. But how do you take a step back and assess when there's just so much unknown at this moment?
Well, the market is presently telling you that the major economic potential concern would be oil markets. We've seen the oil price react. The playbook for an oil price shock, and I think it's a tail risk at this stage rather than a base case, but of course this is the fog of war, so let's see how things play out, would not be the same as the gas price shock, where in a world now where monetary policy is restrictive, and therefore if we were to get a serious supply-side shock in the oil market, not base case again, but a risk scenario, we would likely see a little bit on inflation, but more likely you would see it in real GDP
and in unemployment. That's the thing we need to keep in mind. Whenever monetary policymakers think about inflation and these kind of shocks, it's always a trade-off between inflation and output. The last time we got inflation because monetary policy was easy. Now that monetary policy is restrictive, any supply shock would produce less output. So the recession risk is probably higher, not the inflation risk.
Callum, good morning. And I think Javier Blas's column, and I'd encourage everybody to go and read that, he reflects, he said, look, this is not 1973. This is not when you're going to have a Middle East embargo of oil on the world. So if we take that out, we've got a 5% pop in oil this morning. What goes through my mind is this buying of treasuries that we've got, which is, again, a very classic trade, buy dollar, buy treasuries. But in many ways, Callum, what this does is perhaps put some kind of a near-term peak in the spike in rates and the vigilantism in the bond markets, or is that optimism on my behalf?
No, actually, I think you're absolutely right. I mean, and I would just categorically say the oil price shock at this stage is a risk scenario rather than base case, but that's the framework that one might want to think about it. In terms of what we see in the Treasury market, I must admit I was a bit surprised a couple of weeks ago that markets seemed to think that the higher rate on treasuries was, say, a bond vigilante scenario where there's a context of worry about US debt. Just keep in mind, the dollar was appreciating as treasury yields were rising, and the 3-year money market bet on the funds rate was also edging higher. So for me, that was a normal response to markets digesting what the Fed has been saying, which is higher for longer. We don't have to look very far to see what a genuine debt fear looks like. Just a year ago in the UK, bond yields rose 100 basis points, much like in the US, but sterling was down, not up, because we were shedding risk in the UK market. Instead, now we have a normal response to a monetary policy signal, not a fiscal risk.
So within that context, we've also had markets do this round trip where Friday after the hot employment data, we had a more stronger response priced in from the Fed. And now with the geopolitical uncertainty, we've backed off of all of this. Could this possibly, especially what you're saying, in possible repercussions for the economy, could this cap the Fed?
I think the Fed heading into an election year with a dual mandate, with a slowing economy, will be hoping it doesn't have to raise rates any further. We have to be patient with monetary policy. A strong economy shouldn't be enough just to raise interest rates. It must be a strong economy that seems to be implying an additional inflation risk. Now that US monetary policy is tight, I think it argues for patience. In a heightened geopolitical environment, a risk environment, probably the Fed now, if it's comfortable roughly with its monetary policy, will err on the side of caution and say, well, actually, we don't need to go much further.
All right, Callum, thank you very much for joining us this morning. Difficult conversations to be had. Callum Pickering there of Berenberg. All right, let's get to some other top stories that are trending on the terminal this morning. Some of the things that you need to know. Hundreds of people are dead and at least another 2,000 wounded from a 6.3 magnitude earthquake and multiple aftershocks in western Afghanistan. The epicenter of the earthquake was near Herat city. It was followed by strong aftershocks, including another one measuring 6.3 half an hour later. It said, Manis, a situation we will continue to monitor.
Well, around 4,000 United Auto Worker members at Mack Trucks will strike today after rejecting a tentative agreement in the latest dispute between the union and the auto companies. The strike action against Mack Trucks, owned by Sweden's Volvo, opens a new front in the UAW's fight for better pay and conditions. Danny.
Now, the Wall Street Journal has reported that activist investor Nelson Peltz has boosted his firm's stake in Disney and plans to push for several board seats at the company, which is grappling with sea changes across its business. Peltz's Treon is now one of Disney's biggest backers after roughly quintupling its stake in the past month to more than 30 million shares. Manis.
Well, coming up this hour, we continue our coverage of the Israel-Hamas war with Nimrod Goren, Senior Fellow at the Israeli Affairs at the Middle East Institute. Plus, we catch up with Matt Maley, Chief Market Strategist at Miller Tabak, right here on Bloomberg.
obviously, we were trying to create shoes for me to wear in the Olympics, and that was happening pretty quickly. And then just understanding a new industry and how shoes are even made. But as we went down that path and started to just learn and research more, we learned that shoes have not been made for women. What that means is a shoe is made off of a last, which is a mold of the foot, and it's the mold of a man's foot used to make women's sneakers. And I think it took time for us to really grasp that, because, you know, we've been in shoe stores and we've gone to the women's section and it's like, no, there are shoes for women. Like, what's this over here? And then to really understand, like, all of that is marketing. This is just a man's shoe, like, in a different color. And so that kind of eye-opening experience was just like, okay, we got to do this. And even more than making the shoes, like, there's a deeper purpose here. Like, women deserve better and we shouldn't be an afterthought.
These CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. On's running shoes have a unique look, and so does its leadership team. CFO Martin Hoffman is also co-CEO, and he thinks two jobs are better than one.
How do you balance those two roles?
I feel the CFO makes you a better CEO, and the CEO makes you a better CFO.
Watch Chief Future Officer this Wednesday on Bloomberg.
Israel cannot wage a full-scale war on a nation, its people, its land, its holy sites, and expect peace in exchange.
This is Israel's 9/11. This is Israel's 9/11, and Israel will do everything to bring our sons and daughters back home.
That was the United Nations permanent representatives from Palestine and Israel speaking yesterday. Joining us now from Jerusalem is Nimrod Goren, Senior Fellow for Israeli Affairs at the Middle East Institute. The Prime Minister Netanyahu said yesterday this would be a long and difficult conflict. In terms of the global response that you've seen and heard from the US, from the UK, from France, etc., do you think that that underpins Netanyahu to escalate the response?
I think first it empowers Israelis, because what we've been experiencing over the last 2 or 3 days is something that we haven't experienced in the past. We knew escalations and rounds of warfare with Gaza in the past, but this has nothing to do in terms of scope and depth of damage, of losses, to what we suffered in the past. So the fact that the international community and key countries are standing up for Israel, not only in public statements by their leaders, but also in gestures, public gestures, that gives some sense of solidarity, of security for the people of the country as they face some difficult days.
Nimrod, I want to ask about the timing of this. Our columnist, Bloomberg Opinion columnist John Authers, writes that the U.S. is in the midst of diplomacy trying to coax Israel and Saudi Arabia into an alliance, probably in return for defense guarantees. That would be great for the U.S. and Israel, and terrible for Iran, which would thereby be isolated from the Arab world. Thus, this is a moment to provoke Israel into taking on Iran and disrupt the diplomacy with the Saudis. Nimrod, is there a risk of this, that it, one, provokes Iran, and two, disrupts the diplomacy with the Saudis?
Diplomacy will continue. I think the decision taken by countries in the Middle East to more engage with Israel and to establish ties with it, formal and informal, the interests are still there. You know, countries who signed peace treaties with Israel back in the 70s and 90s, Egypt and Jordan, did not alter that relationship despite different difficulties along the way. Countries who normalized back 3 years ago through the Abraham Accords continued to maintain those relations and advance them, even though there was Israeli Palestinian tensions on the ground. And once the Saudis have made, and it seems they have made, a strategic decision to gradually go towards ties with Israel, I think these incidents, these terror attacks by Hamas, which is not a group that Saudi Arabia supports, will not change the course of events. It likely will slow down things. It will take the focus from diplomacy to security, to military action, and how to restore quiet. But eventually, the course of events, I think, will continue the same that it went until now.
We just heard references there at the United Nations to 9/11. Ian Bremmer, also at Eurasia, said this is no less than Israel's 9/11, a massive intelligence and defense failure for Israel with immediate geopolitical consequences and unfathomable human tragedy for Israeli and Palestinians alike. So equating this to 9/11 event, if I then said to you, what does this mean for Netanyahu? Many people are writing about accusations of Netanyahu took his eye off the ball from a defense point of view, was too focused on politics and perhaps not on the defenses of Gaza. Domestically, what is the risk here for Netanyahu in the midst of this conflict?
The domestic consequences will likely come into play after the security situation is stabilized. Currently, the Israeli society is suffering its losses. It's unifying. It's trying to join hands to help those in need to recover from what happened. There are still fighting going on within Israeli territory in some of the kibbutzim and villages in the south. Later on, there will be an attempt to help the captives. Large number of Israelis are held by Hamas in Gaza to get the upper hand militarily-wise. But once that happens, and it will eventually happen, I think there will be a deep public discourse about why this all happened. It's not something that Israel expected. It's a failure by the government to defend its citizens. It's something that reflects a different priority by the Netanyahu government over the last year that prefer to deal with other issues than what was really important for the safety of Israelis. And it should be leading eventually to a leadership change in our country. It may take time, but I think that will be the direction.
Again, the world has responded to this, Nimrod. You have Chuck Schumer in China right now, set to meet with President Xi, according to CCTV, who has been very critical of the Chinese response, saying it didn't evoke enough sympathy. How crucial is it for Israel to have the support right now of the world's two largest economies?
The support of the U.S. is vital for Israel. It always has been, and the statement by President Biden and the announcement about the security aid package and showcasing the power of the American military in adjacent to Israel's borders. I think those all are signals of support that are important, practically and symbolically. Also the positions that are voiced in Europe and European countries, the EU, that are standing by Israel. All of that has, I think, meaning. China and Russia and their positions are different. I don't think these are countries that Israel relied on at the moment. It's also worth mentioning that in some Arab countries there are voices who acknowledge the suffering by Israelis and against what Hamas has been doing, so there's no unified position also in the Middle East. So the scope of countries that are still
Nimrod,
more than we had in the past, and I think encouraging and important.
Nimrod, briefly, there are hostages in this situation. We yet to know exactly where and how many in total. What role will hostage negotiation bear in perhaps de-escalating this initial wave of conflict?
That's a really important component of this event that we are in. It's something that we didn't see in the past. In the past, Israel, for 1-2 soldiers were abducted, was doing all that it could for years. Now we are speaking about more than 100 people held in Gaza, including children and women. This is something that Israel would like to resolve fast. There are already reports today about attempts by the Qataris to try and mediate an immediate swap, at least of women. There are a lot of kids over there that also need to be brought home. So I think that would be a calculation, but it won't be something that will jeopardize the broader Israeli response. I think Israel is gearing towards a significant military response, while in parallel trying to find ways to resolve the hostage situation.
Nimrod, thank you very much for giving us your time this morning and your thoughts on this situation. Nimrod Goran, Senior Fellow for Israeli Affairs at the Middle East Institute. Danny, let's just reflect on some of the impact of day 3 of this conflict. We're looking at the shekel, of course, the dollar rising, the shekel falling. We have had intervention in size and scale from the central bank, trading at 3.91. Money goes into the dollar. We are seeing a program by the Bank of Israel to sell up to $30 billion in the FX market. Haven status is the dollar, cable under pressure, euro dips 0.4%, right here on Bloomberg.
for the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Brief. I'm Manus Granny in New York with Danny Berger at London HQ. Danny, let's just reflect. We touched on the shekel just before we went to break again. Considerable intervention this morning.
That's right. In total, it's a potential of about $45 billion worth of intervention from the, from the Central Bank of Israel. 30 billion of that would be in FX, and then 15 billion through swaps, Manus.
Just bear in mind, there is over $200 billion worth of reserves at the Bank of Israel. And this goes, if you go back a decade ago, this is when Stanley Fischer stepped in to stem the surge in shekel. So they have reserves aplenty, and there is a global support in politics, security, and finance. Coming up, we continue the conversation right here with Mela Tabak.
We're back
for another season of AI IRL.
My opinions sometimes elicit unfriendly responses from my peers, but let me try to explain my thought on it.
So to start, Twitter and X are two totally different companies in my head. Companies are driven by the culture of the people who are there. They're two totally different places.
Not to ask people about their bosses, but Mark Zuckerberg, how is it changing his priorities?
A lot of time and thought is invested into how you can innovate.
It turns out that, the popular chatbots, ChatGPT, Bard, and others, are so easily hackable to actually drive a different agenda from what is bounded as a response mechanism.
There's a tipping point here where the images have become so good that really smart people who are by design critical are falling for it. That was number one. But here's the other one that really scared me.
Do you think that there's potential to see kind of an AI Rust Belt of sorts?
My personal opinion is no.
That might be somewhat contrary to what others are thinking.
Do you think that it can replicate the solace and comfort some people feel with religion?
What I have seen is that it really varies depending on how people think about the way that, higher powers or the divine might move through the material world.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Today, the people of Israel are under attack, orchestrated by a terrorist organization, Hamas. In this moment of tragedy, I want to say to them and to the world and to terrorists everywhere, the United States stands with Israel. We will not ever fail to have their back.
Israel and Hamas at war. The death toll tops 1,100 as fighting enters a third day. The U.S. says it's sending military support to Israel, while Saudi Arabia calls for de-escalation. Oil surges and safe havens gain. We're going to look at implications for this market as investors now face a fresh dose of geopolitical uncertainty. And risk rebound as China returns from Golden Week break. Xi Jinping will meet with U.S. senators in Beijing as Senator Chuck Schumer blasts Beijing's response to the Israel-Hamas conflict. Welcome back to Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Manus, it is a very clear haven bid that's coming into this market. It's not unusual for this unknown of a geopolitical event, an attack, a war, that you would have this type of pricing. In the bond market, we're getting a bid into futures. The cash market is closed today for a holiday in the U.S. That's helping to dampen volatility somewhat. But the Israeli markets, you're seeing a plentiful volatility there. The central bank, Manus, as you and I just discussed, did step in with support. Now, it didn't necessarily change the direction of the weakness in the shekel, which is now trading at its weakest level in 7 years. But as Jeffrey Yu from BNY Mellon points out, they want stability, not necessarily to change the levels at this point we're in. The Israeli stock, the Tel Aviv Stock Exchange, that weakens further at the lows for the day, down about 0.1%. Manus, that adds to yesterday's loss in the Tel Aviv Stock Exchange of about 6.5%.
Yeah, the epicenter really, Sunday trades in the Middle East, was a reflection in equity risk. This morning, we give back 0.5% on the S&P 500. Of course, it was the Goldilocks soft landing jobs number. They took you up by 1.5% on Friday. We gave about 0.5% back. We have a new open-ended geopolitical risk, which will ultimately deliver a dollar underbelly flow, perhaps into U.S. stocks as a haven if there is an escalation. John Arthur's piece this morning, Gaza won't hamper markets unless Israel hits Iran, and that is the real escalation risk. Stocks give back 0.5% this morning. Crude was up 5% at one juncture in the overnight. It was a very natural disposition for the market to propel itself higher. Halima Croft at RBC say Iran remains a very big wild card and depends on how much Netanyahu blames Iran and perhaps those warships which are on the way to local areas near Israel. What happens next? There is a risk of a flashpoint in the Strait of Hormuz. That's what people are worried about. It is not 1973 and an oil embargo from the Arab nations against the rest of the world. And the dollar is bid a very classic defensive play. The fundamental response here is you want to own dollars. You're seeing the euro under pressure, the pound is under pressure. So those classic haven trades and lifting off the carry trades is what you're seeing at the moment. Euro dollar down 0.5%, cable off 0.4%. Danny, good morning.
Good morning to you, Manus. I really want to take what you just showed us and bring it directly to our next guest, because it is a clear haven response. And joining us now is Matt Maley, Chief Market Strategist at Miller Tabak. Matt, when you look at a market like today, when the dollar is bid, oil is bid, havens are up, a lot of these Israeli markets are down. Do you want to participate in that trade, or is this a time to take a step back and assess?
Yeah, I think it's a time to take a step back, as you say, Danny. It's just that there's so much uncertainty out there. I think a lot of people believe that this is a type of situation that it really is going to have to escalate in a significant way, especially with Iran, for this to become a big problem for oil to really take off. I mean, thankfully, crude oil had come down in the last couple of weeks. Just a week and a half ago, people were saying that $100 was a given, and now we've pulled back. So the bounce back, we're still not really very close to $100 on West Texas Intermediate, WTI. The market is actually holding up pretty well. My concern, though, is that it just adds another level of uncertainty into the marketplace. I mean, here in the U.S., the Speaker of the House is no longer in place, and we have concerns about inflation, whether really bouncing back is not a big concern, other than it's really kind of stopped falling. So, uncertainty isn't great for the stock market, and so there's still some concerns out there.
Matt, good to see you this morning. Look, I showed the dollar. Danny was showing what's happening with treasuries. Obviously, the cash market is closed this morning. What goes through my mind is this: the asset managers that I was talking to yesterday, they wanted to buy treasuries last night on the open. And interestingly, they actually wanted to buy stocks on any material drop, because in their mind, this will perhaps hamper a further acceleration by the Fed. Now, maybe that's just a zeitgeist for this when we're in this open-ended geopolitical risk angst, these 5 days of that. Would that make sense to you, or you are more concerned about a major break to the downside in equities?
Yeah, I think, the problem we have here is that just because the Fed might, put a stop to any kind of further interest rate hikes, and some people have already been calling for that, but we still have this situation where the Fed seems to be a long way away from cutting interest rates. And the big problem is we've had this huge divergence develop between the stock market and the bond market. I mean, we've had this great article in Bloomberg over the weekend about the historical nature of the rise in interest rates over the last 3 years. And we've certainly seen that just since the last spring, where the market, bond yields have just, shot up to the upside, and the stock market has only just reacted to it more recently. So I think there's got to be more movement in the stock market to change it. Normalize that divergence.
Right. Well, to that point, Matt, it would have been a really winning trade over the past 3 years to go long stocks and short TLT, short bonds. I mean, it's been a winning trade. What breaks that? What breaks that type of momentum?
Well, I don't know if there's always a specific catalyst. My concern, though, is that in every single instance, when you've seen a huge rise in interest rates without a reaction in the stock market over the last 40 years, at a time when the stock market was expensive, as it was at the top, and still is on a relative basis, the market has gone down. This divergence has been resolved with the stock market coming down to meet that decline in the TLT. The correlation between the TLT and the stock market is a very strong one. The major divergence has developed, and people have to be very cognizant of the fact that that divergence is still very, very strong. We can't have a stock market that is as highly valued as it is today, with interest rates up well above 4%.
In terms of the reflection that markets and money will make on this fairly tragic situation, how much of it will be real defensive plays now? How much money will actively be taken off? Or do you sit, hold your nerve, try your best to see what happens? Because I would put it to you that this is open-ended geopolitical risk, and perhaps geographically when we sit here, and I've just come from that region, and I can assure you that this is a very live, open-ended geopolitical risk, especially with Iran.
Well, I mean, I do think, as much as I'm concerned that the stock market has to come back down with valuation levels, we do need to, sit and, don't panic is the key situation. But I also think that, if you sit back, assess what's really going on. But this situation with Iran, if it explodes to the upside, I mean, there were, it's maybe a bad analogy, but I remember back when the pandemic was coming, and everybody said, "Don't worry about it. These pandemics don't really become a big deal," and all of a sudden it was. And when Ukraine, and maybe a better analogy, Ukraine and Russia, well, this is, it's not going to last that long. Well, it has. And as you say, if this continues, you have add another uncertainty in the marketplace that is again where things are out of whack in terms of what's going on with interest rates and what's going on with the stock market. You do want to be more cautious, a lot more cautious, in my opinion.
I mean, to that point, when there's a lot of energy at stake here, again, analogous to your Ukraine example, do you want to start to look at energy stocks? Do you want to start to look at the commodities, the commodity currencies? Is that where you want to start making adjustments to prepare for the unknown?
Yeah, definitely. I mean, one of the things that I mentioned was that how crude oil had come down in the last couple of weeks, which is very good. And in fact, it was something I called for. But thankfully, late last week, I turned more bullish on the energy stocks. I mean, obviously, I had no idea that this was going to happen. But even on a natural basis, the Saudis have been pushing very, very hard to keep energy prices elevated. We did have some negative news last week about gasoline demand here in the U.S. But I just think that with what the Saudis want to do, they're very determined to keep those oil prices higher, and the stocks have come down. I mean, we're in a correction territory in these energy stocks, down more than 10%. This is a great opportunity to come back in and add to the names that have already worked well for the last year, or actually the last couple of years.
Matt, thank you for joining us this morning, giving us your perspective. Yeah, yourself and Goldman Sachs, apparently we're not to worry about the lowest gasoline demand in 25 years. I believe you both. Matt Maley of Miller Tabak there with his views this morning in these difficult markets dealing with open-ended geopolitical risk. Oil is surging after the Hamas attack on Israel. Inflaming tensions in the Middle East. We'll discuss the ramifications right here on Bloomberg Brief this morning.
Names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the U.S. and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Danny Berger in London. Manish Krani is in New York. Oil is gaining this morning on fears that the worst attack on Israel in decades could roil the wider Middle East, home to almost a third of global supply. Prices up 3%. Bloomberg's Will Kennedy joins us now on this. I mean, Will, we can see there some of the short-term response, at least the gut punch up 5% at one point. But how do you assess both in the short-term response and what this means for the medium term?
Yeah, there has been a reaction. I think that the events are of a scale that clearly traders are worried about increased instability in the region, although it's worth pointing out, as your previous guest did, that it's still way below the highs well above 95 that we saw late last month. But the concern here, I mean, I think in the short term, the conflict in Israel itself poses no threat to oil supply. The risk is that it leads to new pressure on Iran. And specifically, we've seen a lot of extra Iranian oil in the market this year, 700,000 barrels or so of extra supply, which was one of the reasons that happened is the US was comfortable with that despite sanctions on Iranian oil. So the question that traders will be asking is there a scenario in which the US becomes more assertive of those sanctions and some of that oil stops coming to the market?
And that's the very point that Halima Croft put out in her note, and I know that we quoted that along with a number of others. That level of angst, it's a very big wild card, and Israel will escalate its long-running shadow war against Iran. Let's take that thought and build, because OPEC, ironically, have got their oil demand forecast out for 2045, and they're talking about that with the climate crisis. What goes through my mind is here we have an evolution of the oil price. We have Russia and Saudi Arabia continuing with their unilateral cuts. You know, Will, is there some kind of a debate to be had if there is a real further shock and escalation? Does that possibly change that landscape for those unilateral cuts, or is it just too early, Manis, to talk about that, and you're going to have to wait and see how this all evolves?
I think you're going to have to wait. I mean, from a Saudi perspective, they do have that million-barrel unilateral cut, and that gives them a policy tool outside the OPEC framework and outside the OPEC plus framework to manage a market. And there are scenarios where you could see they might want to use that. But I think right now, the picture hasn't fundamentally changed. Saudi Arabia wants the oil market to keep drawing inventories. It doesn't target prices, but I think it's fair to say that it wants prices at around $100, and that's still somewhere away, and that's going to be absolutely the focus of their oil strategy right now. I think we're a long way from any scenarios where they put that oil back in the market sooner than they otherwise would have done. For Saudi Arabia, the focus is on getting the price that they feel that they should be getting for their oil.
Okay.
I mean, if we do enter the scenario where there is less Iranian oil in the wider marketplace, what other levers are there? Can the U.S. still draw on its SPR? Can they be more relaxed with Venezuelan oil, for example? What can take its place?
No, ultimately, those policy levers are open if we saw a much worse scenario emerge in the Middle East, if it's developed in those sort of ways. People have focused on Venezuela as one possibility. Clearly that there are sanctions there, and there may be a little bit more oil that could come from there. And the SPR has been heavily drawn down, but it still contains an awful lot of oil, and it is designed to give the U.S. protection against disruptions outside the U.S. to oil supply. So in some of the more extreme scenarios that aren't on the table yet, but people are going to speculate about, clearly that is a lever that the U.S. has.
Okay, Will, thank you very much for coming into the studio this morning, giving us context. And just the number from OPEC is demand for oil will rise by 16% to 116 million barrels a day by 2045. Will Kennedy appraising the situation in the energy markets. A bipartisan delegation of U.S. senators arrived in China on Saturday. Among them was the majority leader, Chuck Schumer, criticizing Beijing's response to the Hamas's unprecedented incursion into Israel.
The ongoing events in Israel over the past few days are horrific. I urge you and the Chinese people to stand with the Israeli people and condemn these cowardly and vicious attacks. 250 young people gathered at a dance, and the Hamas terrorists took machine guns and shot them all dead. I was very disappointed, to be honest, by the foreign ministry statement that showed no sympathy or support for Israel during these troubled times.
Joining us now is Bloomberg's Rebecca Chung Wilkins. Rebecca, Xi Jinping is meeting Schumer today. So are we expecting some kind of an announcement or some kind of a progress on the criticism that Schumer has made, or what do we think this meeting will deliver?
Yeah, I think absolutely. I mean, the sort of background of this and the war and conflict that's broken out between Israel and Gaza has completely changed the dynamics of this trip. Just bear in mind that going into this, traders were anticipating it, or sort of cautiously optimistic that this would help with that build momentum to reset ties between China and the US, essentially leading to more stability. And instead, we have this very clear line in the sand between, for example, where China stands with a statement that didn't mention casualties of Israeli citizens at all, and instead reiterated the need for Palestine to establish an independent state to resolve the conflict, versus those Western states in the US, also Germany, the UK, and so on, who have outrightly condemned the attacks. Instead, they clearly pledge their support for the Israeli people and for Israel itself. So a very sort of clear division here too that we've seen between China and the rest of the world. And in the background of that, for US senators visiting will of course be China's cozy relationship with Russia and its stance on and its sort of relationship with Vladimir Putin, its sort of hesitance to outrightly condemn the war there too, even as Beijing insists on projecting this image that it's made of itself as a sort of peacemaker and Xi Jinping as a responsible global statesman.
Rebecca, at the same time, we've had China return from the Golden Week holiday, so focusing more on the domestics here. We also have some data on just what traveling has looked like in spending. What does it tell us about the outlook and recovery for China?
Yeah, another sort of surprise and a disappointment for investors here too, really weaker than expected data. Now, we saw a big bump up if we compare it to 2022, when China was still in that lockdown period, so travel and spending coming quite a ways up. But when we think about it in comparison to pre-pandemic, so 2019, we're really only seeing just a modest increase there. And in fact, when we look at the numbers, dig into, for example, the travel number of trips, we actually see these missing the official estimates from authorities. So 900 million trips projected by officials going into this 8-day holiday. And instead, we missed that, about 830 million instead. The spending, too, came in lower than that projected figure. And the other big sticking point remains this lukewarm response that we saw in sales. This is typically a really big time for property sales in China, and we just haven't seen that coming back. That is the big perennial question for this economy. Is the real estate market going to be able to start turning around? Are we going to start seeing a bottoming out there?
Rebecca, thank you very much for that. That is Rebecca Chung-Wilkins on the latest in China. Now, Mana, some breaking lines to bring you. We have the Nobel Prize in Economics. It is U.S. labor economist Gladia Golden. She is a professor at Harvard. She is one of the few women to win this prize in economics. Only 2 besides her have been awarded since it first was awarded in 1969. Her research focused on inequality and the female labor force. Now, coming up, we're going to take a look at some of the market-moving events to watch throughout the day. A quick check on markets. S&P 500 futures are down more than 0.5%. The rest is a clear bid to havens with both the dollar and gold higher. There's your check on crude, up 3.4%. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
The boundaries of the entertainment world are blurry, and they're all scrambling for the same thing, screen time. And navigating this multiverse is no simple task. At Bloomberg Screen Time, it's culture, business, converged. Bloomberg Screen Time, Naya Studios, Los Angeles, October 11th and 12th. Get your tickets at bloomberglive.com/screentime.
Watching Bloomberg Brief. I'm Danny Berger in London alongside Manus Cranny in New York. Let's get you set up for the week for your trading day. And it's another busy week of Fed speak. We're also going to have the release of Fed minutes. That'll happen on Wednesday, followed by the U.S. CPI report on Thursday. Now, meanwhile, in Washington, White House Republicans plan to hold a vote for a new House Speaker on Wednesday. So we might get that change by midweek. Then on Friday, we're going to have JP Morgan, Citigroup, Wells Fargo, and BlackRock. All of them will kick off Wall Street's earnings season. Manus, it is a busy week, but for now, it is assessing the impact of one of the biggest cross-border attacks on Israel in decades and what that means for global risk.
Yes, and we have an ongoing hostage situation. We need more clarity around that. We've seen the security rhetoric coming from the United States, from the UK, from France, all in support of Israel. Now, the consequence is a very immediate knee-jerk reaction in oil and the dollar. We've covered that, but it's good to reflect back on the oil market again. It was propelled last week. I just need to put this in context for you, Danny. Last week we gave up $10, down 9%. You can see this spike higher this morning in the overnight. Let's just roll it over and just give you a snapshot of that. We were up 5% at one juncture, and Halima Croft makes the point that Iran is the biggest wild card in terms of the blame and the escalation. That's your risk.
Yeah, it's a similar point that John Authers makes as well, that should it escalate further, should Iran be evoked, that's where the real risk starts to kick off for these global markets. Now, some of the most liquid trading, because treasuries are closed for the cash market, is currencies. Let me show you that quickly. It's all about the dollar, Manus. It is all about that haven bid this morning.
It is indeed. The dollar's up 0.25%, and those carry trades get taken off. The shekel remains under pressure. This is Bloomberg.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television. The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to suicide.
Bloomberg. Context changes everything.
Today, the people of Israel are under attack, orchestrated by a terrorist organization, Hamas.
It's incomprehensible, and we're still waking up and hoping it's a nightmare.
This is Israel's 9/11, and Israel will do everything to bring our sons and daughters back home.
I want to say to them and to the world and to terrorists everywhere, the United States stands with Israel. We will not ever fail to have their back.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning, good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your market is negative this morning. TK, your headline over the weekend, Israel is at war.
There's only one headline this weekend, bond markets closed. We'll cover this continued bond debacle, but certainly front and center in the news, still happening according to our people in Tel Aviv. This is a dynamic story on a difficult Monday morning.
Lisa, we have to work through three questions this morning. Where are we now? Where is this going next? And the big one for many, after seeing the brutal, shocking images through the weekend, how on earth did this happen?
Especially because it shook a sense of security, a sense of invincibility, a sense of intelligence, an ability to foresee what was going to happen within Israel. At this point, there is a lot of questions, as well as how far this will percolate in a geopolitical sense, right? I mean, will this ensnare Iran? How this will really affect the Israeli-Saudi Arabia pact that was in the works over the past couple of weeks and months.
Let's turn to the price action briefly. Your equity market pulling back on the S&P 500 by 0.6%. Looking at the foreign exchange market, the dollar is stronger against the euro at 105.33. And there's the move in the oil market, Tom. WTI up by 3.5% at 85.70.
Yeah, I've watched oil as well. And of course, in a day where we're not getting bond information from the United States, maybe it's a little sketchy. But one little tea leaf, John, really captured my attention. And this was stronger Swiss franc. We really haven't seen this in the last number of weeks. And Swiss franc strengthens through 0.96. That's, it's something to watch. That's an indication of the tension that we see in the Levant.
Lots of work being done on the south side just to work out where next in the commodity market. Halima Croft over at RBC, Lisa, rightly pointing to Iran as the wild card in all of this. I believe that Goldman Sachs sticking with that triple-digit crude forecast for next year, and that's where our focus will be through some of this morning.
Halima Croft highlighting the risk that this potentially increases sanctions on Iran from the U.S. and that really is one of the key constraints on supply. There isn't necessarily any disruption seen as of yet, but you have to understand, and this is what everybody is trying to grapple with, if you have true geopolitical risk, true conflict in the Middle East, the major producer of oil, this is going to potentially be disruptive, and people are preparing for that today.
Brent crude, Lisa, at 87, WTI 85.70.
It's a big week this week, later in the week when it comes to economic data, CPI, PPI capping the week with JP Morgan and their earnings. Today, we do have a host of Fed speak down in Dallas for the NABE conference. Dallas Fed President Lori Logan, Fed Vice Chair Philip Jefferson, Fed Vice Chair for Supervision Michael Barr, who I know Tom will be listening to. Curious to hear how they frame what we got on Friday, given the fact that we did get a surprisingly hot number, at least in the headline level. Today, the World Bank and IMF annual meetings in Marrakesh kick off through Sunday. Tom will be heading there later in the week. We did hear from Christine Lagarde today saying that the IMF cut its global forecasts ahead of what was going to be released by tomorrow. And then today, also percolating in the headlines, ongoing strikes, this time in Canada. A deadline almost at midnight for General Motors and Unifor, the Canadian equivalent to UAW, trying to come to some sort of labor agreement with GM having a factory there and some parts and engine manufacturing areas as well.
Lisa, thank you. Let's turn to our top story. The Israel-Hamas conflict entering the third day with over 1,100 dead. Israeli forces responding with strikes in Gaza after the militant group entered Israel, taking hostages over the weekend. The Wall Street Journal reporting Iranian security officials helped plan what would be the biggest Israeli security failure in decades. U.S. Secretary of State Antony Blinken maintaining they have not seen evidence to confirm cooperation.
There's a long relationship between Iran and Hamas. In fact, Hamas wouldn't be Hamas without the support that it's gotten over many years from Iran. We haven't yet seen direct evidence that Iran was behind this particular attack or involved, but the support over many years is clear.
Joining us now is Norman Rule, Senior Advisor for the Transnational Threats Project at the Center for Strategic and International Studies. Norman spent 34 years in the Central Intelligence Agency. Norman, wonderful to catch up with you under tragic circumstances, obviously. Norman, we have to start with the main question that was on the lips of everybody. What happened and how did this happen over the weekend?
Good morning. Israeli security forces, primarily the Shin Bet, have had responsibility for Gaza and the occupied territories, and they have over the years demonstrated a very capable architecture of surveilling Palestinian activity. And this has allowed them to frustrate multiple Palestinian attacks and identify, locate, and when necessary, neutralize Hamas and other Palestinian officials. In this case, it appears that Hamas was able to develop a compartmented planning, execution, and training program within that security bubble that not only evaded Israeli surveillance, but enabled this operation to be undertaken without Israel seeing indicators that this existed. To be clear, this is an intelligence failure by Israel. However, they have a very capable intelligence service and are catching up. And also, to be clear, this is a failure by the international community as well. America and other countries do not cede the protection of their nationals to Israeli security services. And we also did not see the indicators of these event.
Norman, wonderful to have you with us and with your years and years with the CIA. This is not Matt Damon in a movie. This is reality. How do you take over a geography that is 2 times the size of Washington, D.C., and has 2 million people crammed into it? How do you link your intelligence knowledge with the military effort to de-Hamas Gaza?
It's possible, and Israel has done this for some time with Gaza, the West Bank, and for Lebanon. However, you raise an extremely important point. For Israel to consider ground operations or hostage rescue operations, this is one of the most challenging environments on the planet. It's not just that this is a concentrated civilian areas. This is a concentrated civilian area with very tall buildings. Now, the United States and Iraq and Britain have some experience in working this in Iraq and Afghanistan, but these were much smaller areas with much shorter buildings. For Israel, this is an extraordinarily difficult challenge, and no one should underplay the casualty count that is likely to happen for Israelis and Palestinians if ground operations are undertaken.
You look at the narrow like that, and you also look at the bigger. In your writings, you talk of a multipolar dynamic, and you take the tensions of the Middle East and the Levant back to 1870 and 1930, way before 1967 as well. What's the multipolar dynamic that Israel faces right now?
Well, it's a good news, bad news story. You have a situation where on the good news side, there are strategic, long-term, and continuing drivers for the Saudis and for the Emiratis and others to promote regional integration that must include Israel because of its geographic location. That hasn't gone away, and that will sustain the ongoing diplomatic process between the United States, Saudi Arabia, and Israel to restore relations. On the downside, you have a international community that is cracked apart. So pulling together Russia, China, and the European community in a way that actually promotes a peace plan of some consequence will be impossible.
There's also a question about the role of Iran, especially as the Wall Street Journal is reporting that they had an active role in helping to plan this attack. We have not heard from the U.S. government confirming that. They said they are investigating. What are the potential consequences? What is the escalation type of potential if Iran is deemed to have had an active role in planning these attacks?
We should be careful about the report. Iran is unlikely to have played a robust active role in planning the attack simply because they are not on the ground. They do not have personnel on the ground. They would not be able to provide an intelligence input to those operations, and their involvement would compromise the compartmentation of the operation. However, Iran has provided drones, training, money for over the years. As Secretary Blinken has correctly stated, Hamas would not be Hamas without Iran. But that fits Iran's modus operandi. In essence, what they do is they enable proxies to conduct operations that parallel Iran's strategic objectives. Those operations play out. Iran is able to say it supported them and enabled them. Iran achieves its strategic goals. But Iran's direct hand is not seen, and thus Iran escapes international punishment.
The speculation is that one of the strategic aims was to disrupt the Saudi Arabia-Israeli agreement that was being worked on and coming to some sort of fruition in the next couple of weeks and days. How much do you think that that has been iced? How much are people really discussing that aspect of the strategic potential motivation for the timing of this attack?
There's no question that that was likely one of the motivations, but this is a pie that has multiple pieces in it. This operation was clearly developed over many, many months. It would have taken a very long time, if only because of the compartmentation requirements, to pull this together, and therefore it had a number of reasons. The Raisi government and its proxies have maintained an assertive foreign policy posture for a very long time. There was no specific incident that provoked this, but certainly one of the benefits for hardliners in Iran and the proxies is that this will complicate, if not disrupt, the diplomatic process underway.
Norman, we know based on reports they have taken scores of hostages. Does that complicate Israel's response to this?
Hugely, and we should note that these are international hostages. Reports are unconfirmed, but there may be Chinese, French, Thai, as well as American hostages, as well as among the dead in Israel. So this is in many ways a Hamas attack against the international community. These hostages will be dispersed within Gaza. Isolating them and identifying their locations and developing rescue plans will be very, very difficult. The United States has considerable experience here and will no doubt be sending intelligence, security personnel to assist the Israelis, who are also very good at this. This will also inject considerable amount of complications to diplomacy. So we've watched the United States, Saudi Arabia, and others engage Qatar, Turkey, which have good relations with Hamas, and a variety of actors to see how this plays out. It is not inconceivable that you will have outreach to Iran itself to assist on this. That rarely works out well. We should recall what happened last when Iran had hostages in Lebanon.
Norman, a la Kissinger, Mearsheimer, Robert D. Kaplan, and frankly you, is this a day where America shifts back to real politics? I mean, forget about shuttle diplomacy and all of that. This morning, is it all about a real politic that we think we have forgotten and moved on from?
Well, the line of the Middle East is unlike Las Vegas. What happens in the Middle East never stays in the Middle East. And the Biden administration will need to develop not only a strategy to address this issue, a strategy to see how this impacts existing programs such as the Iran and Saudi and other initiatives, but likewise, they're going to have to staff this out. They're going to have to apply a lot of personnel and policymaker bandwidth, which will come at a cost of other issues. This is a seismic issue which is going to transform regional policymaking and international policymaking. We're in the early days, and the ripples of this attack in terms of policy and domestic politics are still playing out.
I want to ask you this question to wrap things up, Norman. No speaker in the House, no ambassador to Israel, Egypt, to Lebanon. Is that a symbolic failure, or will that have real-world consequences?
Well, it's certainly a symbolic problem, but we shouldn't discount the capabilities and roles of our chargés in these locations, of intelligence personnel, of military personnel. Those communication channels remain robust, and these capitals often deal directly with the United States in Washington through their very able ambassadors. So the system of handling this is underway and will be executed crisply. It just would be better and easier if these personnel were in place. And Israel has received a considerable boost in the number of Iron Dome interceptors and ammunition it will need. And that has occurred without the House being in order. But we need to fix this.
Norman, thank you for your insight this morning, and hopefully we can catch up again before the end of the week. Norman Rule there of the Center for Strategic and International Studies. TK, they're going to have to staff this out, and fast.
Well, that's the authority there, and that is the key phrase for me in what you heard there from Norman Rule. We will have to staff this out. How many years, how many administrations have we short-staffed all of what we see in the Eastern Mediterranean? I mean, that's, to me, the key phrase.
On the markets in the next hour, Amy Wu-Silverman of RBC. On policy, Isaac Boltanski of BTIG. And here in New York, AMH a little bit later in the next hour. From New York, this is Bloomberg.
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Selling the Patriots, you're not selling the packaging company. I guess you don't like to sell things, right?
I really don't. We try to create a family environment in everything we're involved in. People want to be part of something that's bigger than themselves.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
There's a long relationship between Iran and Hamas. In fact, Hamas wouldn't be Hamas without the support that it's gotten over many years from Iran. We haven't yet seen direct evidence that Iran was behind this particular attack or involved, but the support over many years is clear.
Important comments from Secretary of State Antony Blinken over the weekend to ABC. Those comments running counter to what we heard in a report from the Wall Street Journal yesterday evening. The journal reporting Iranian security officials have planned what would be the biggest Israeli security failure in decades. We'll return to that story in just a moment. If you are just joining us this morning, good morning and welcome to the program. Your equity market on the S&P looks a little something like this. We're negative by 0.5% on the S&P 500. Treasury market is closed today for Columbus Day. Yields are lower elsewhere, though. I think capturing that risk-off story, yields lower by about 4 basis points on a German 10-year to, let's call it, 2 84. And in the commodity market, Tom, the rally, I think we all anticipated, up by 3.5% on WTI, 85.65.
I didn't look at the standard deviation move there, but yeah, jump up in oil. I did look at the standard deviation move in the Israeli shekel, and it was 3.8, which I would think, John, given the angst, is normative, to be polite, and the central bank is acting on that.
To support the currency.
Yeah, weaker shekel by 3.8 standard deviations, and that's within the realm of reason.
And a question we're asking this morning, Tom, whether this has the potential to have a broader regional conflict beyond Hamas and Israel.
It is a war. The news and I thought Lisa captured this brilliantly. The idea here of the back and the forth and the news reports and who's got it and who doesn't. That's all secondary to just the sheer fury of day 3 of any kind of war. And I would go geographically off of the wonderful conversation with Norman Rule and look to the north to Hezbollah on the Lebanese border. To me, the idea that this is a one-front war, we learned in 1967, no.
Let's bring in our next guest. Steve Chevron joins us now, Head of Multi-Asset Solutions at Federated Hermes. Steve, a question I think people will be asking in the market is whether this represents a durable headwind to investor sentiment. Do you think it could?
Yeah, I mean, it certainly adds to uncertainty. I mean, it's a difficult question to answer, John. I mean, just watching the footage over the weekend, I mean, I know we have a job to do, but I feel like equities are the least important thing considering some of the images we saw over the weekend. I mean, all things being considered, just trying to decipher it, obviously it's an upward pressure on the commodity complex and oil. It adds to uncertainty in the markets. Yeah, you saw bonds rally a little bit, but not anything major. I mean, we've seen Treasury yields go up 10 basis points in a day. A 4 basis point decline in international high-quality bonds isn't much. I think the point you just made, though, is the appropriate one. What happens next? And does this spread? Does it become a wider regional conflict? And that has all kinds of implications. But at this point, I mean, we all have to wait and see.
You are wonderful at the cross-asset analysis. This bond debacle that we're in right now, how does it affect Steve Oth? I mean, is he getting his requisite 9 hours sleep a night? How does it affect the world of equities?
So Steve and I are very close. I don't know what he does at night. What I will say is that, there's a lot of, it's a hard one to tell. You've got a yield curve that's uninverting. And historically, when that happens, that's a real imminent sign of recession, but it's never uninverted this way, which is this kind of bearish steepener. It's not like the 2-year yield is falling in anticipation of cuts. You've got a 10-year that's rising. And the question is there a buyer's strike on the Treasury, or is the market trying to normalize to a new normal of a kind of 5 to 6% nominal GDP? And one of those is much more bullish than the other.
Tell me about value versus growth. I mean, I was shocked on the Exxon Pioneer transaction rumored last week that these are 10 and 12 and 13 multiple companies, where we're talking about the chosen 7 are 25 and 30 multiple companies as well. How do you define it, Federated growth in value?
Well, just using a simple kind of Russell 1000 growth versus value. Coming into this year, we thought inflation would be a little bit more durable and the Fed would hike more than the market expected. That was right. We thought growth might struggle a little under that environment, and that wasn't. We still think that this market broadens out. We think it broadens out to cyclicals, pricing out some recession risk, at least in the short run. We think the dividend players and their safety are attractive. And so, yeah, we've nibbled on large cap growth on the most recent sell-off because we've been so underweight, but we still think that there's an opportunity for the market to broaden out.
There's a question about how much can change in a minute, given some of the concern that we're seeing percolate out of yet another front for a geopolitical conflagration. How much would your view change should oil sort of bear the brunt of this? If we do see any kind of disruption and we do see oil prices climb above $100 a barrel on a sustainable basis?
Yeah, I mean, look, what the market and the Fed are trying to pull off here is an inside straight to a softer landing. And so anything that makes that path more difficult is a challenge, whether or not that's higher oil prices, resurgent inflation, rising delinquencies, a 10-year yield that becomes unhinged to the upside. Those are all risk factors. And I think what the last year has told us is you want to be humble. You want portfolios that are close to neutral, pointed in the direction of your fundamental view. And so, we think markets are a little bit upside biased here, or certainly before the weekend. But you want to stay close to neutral and humble because there's a lot of risk factors out here that are really unprecedented.
Citi this morning saying the conflict in Israel to come as a stagflationary shock to the Israeli economy. Could you say the same thing about the global economy right now, given what you're seeing elsewhere?
Well, it's certainly possible, but again, I think what has to happen there to be a real stagflationary event is you need to draw on some of the northern countries, or you need a tax on Iranian refineries or things of that nature. There's probably not enough of an oil price shock where things are located today, but a spreading of that certainly can. And again, look, on this theme of humility, John, if you would have asked me, what would have happened in the wake of the Ukraine invasion, who would have gotten the market reaction right? And so we're not experts in these areas, and we stick to the fundamentals as best as we can.
It's one of those mornings where you can learn something about how the market is responding to this incoming information and events over the weekend. In some ways, it's a shame the cash treasury market is closed today. Are we learning that bonds still provide those risk mitigation characteristics on a morning like this morning?
There's no question about that. Every time that bonds as a downside protection mechanism have been doubted, they show up. And so, look, I mean, unless we're looking at some, massively secular buyer's strike, and I think it's premature to say that, I think when there's trouble in the world, the safest asset is the United States Treasury, and I don't think anything's changed about that. And I think we'll probably see that tomorrow.
What are you watching as this sort of progresses over the next hours and days, as we read all of the news and how it's potentially spreading or being contained? What are you looking for to potentially change your outlook one way or another?
Well, again, I think, spreading north, whether it's Lebanon or whether there's any kind of direct involvement with the Iranians, would certainly be something to watch. I think in addition, if you start to see, I don't know how to say this, but if you see kind of any terrorist activity in non-Middle Eastern countries, that's something that certainly could shake confidence in the world, and you watch closely. And then honestly, Lisa, more than anything, it's just watching in horror at the atrocities that are going on and feeling heartbroken about it.
Just truly shocking. Steve, thank you, sir. Thanks for the insight this morning. Steve Chevron there of Federated Hermes. TK, I think straight away it was Ian Bremmer of Eurasia calling this Israel's 9/11.
Yeah, Ian, as usual, no surprise, did a great job. And what he did here, folks, and is what we'll do at Bloomberg News all through the weeks to come, is to try to give scope and scale. And what Dr. Bremmer did is he said, here's a population of America, here's a population of Israel, compare and contrast 1,000 whatever dead, and it is a scale of war.
We have to consider then, Tom, whether this would represent a paradigm shift for the region as big as 9/11 more than 20 years ago.
I'm not expert on that. John, I'm just not going to go there. What I am going to say is everything shifts frankly, from Russia, but I would certainly say from Erdogan and Turkey down around and across all of northern Africa. It is a titanic shift of tone.
We don't know how it spreads, right? And this is sort of the key question, which is the couple of days to come, we're going to have maybe a better sense of what a ground operation looks like and exactly how this does potentially act as a paradigm shift in the region. But that is the uncertainty, I think, that people are responding to when you can see the price change in oil, because you have to imagine this kind of instability in the heart of really oil producing global production. You have to think this is going to have some sort of ramification.
National Security Advisor Jake Sullivan, a little more than a week ago, the Middle East region is quieter today than it has been in 2 decades. It is not quiet anymore. Coming up a little bit later, Isaac Boltansky of BTIG in the next hour. Bloomberg's Anne-Marie in a studio here in New York. From New York City, equities lower. This is Bloomberg.
Obviously, we were trying to create shoes for me to wear in the Olympics, and that was happening pretty quickly. And then just understanding a new industry and how shoes are even made. But as we went down that path and started to just learn and research more, we learned that shoes have not been made for women. What that means is a shoe is made off of a last, which is a mold of the foot, and it's the mold of a man's foot used to make women's sneakers. And I think it took time for us to really grasp that because, you know, we've been in shoe stores and we've gone to the women's section and it's like, no, there are shoes for women. Like, what's this over here? And then to really understand, like, all of that is marketing. This is just a man's shoe, like in a different color. And so that kind of eye-opening experience was just like, okay, we got to do this. And even more than making the shoes, like, there's a deeper purpose here. Like, women deserve better and we shouldn't be an afterthought.
These CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. On's running shoes have a unique look, and so does its leadership team. CFO Martin Hoffman is also co-CEO, and he thinks two jobs are better than one.
How do you balance those two roles?
I feel the CFO makes you a better CEO, and the CEO makes you a better CFO.
Watch Chief Future Officer this Wednesday on Bloomberg.
Equities falling this morning. We're negative on the S&P 500, down across the board worldwide. We're down by about 0.5% on the S&P, following the best week of gains on the S&P 500 since the 1st of September. On the Nasdaq, pulling back by about 0.7%. Turn to the bond market, 2-year, 10-year, 30-year. In the German bond market, yields lower a couple of basis points with the Treasury market close. We're down 2 or 3 basis points to about 2.86 on a 10-year in Germany, down 2 or 3 basis points on a 2-year as well at 3.1%. I don't think this is a judgment on anything at all at the moment, Tom, with regards to inflation or monetary policy.
Yeah.
This is just one of those knee-jerk reactionary moves where you go to the perceived haven of sovereign bonds, and apparently based on this price action, the perceived haven of bonds still exists.
Yeah, my tea leaf is to look at Euro Swissy here. You can look at the German bonds, which are price up, yield down. But in the equity market, again, with a dearth of disinformation, I would suggest a bracketed VIX under 20, 19.06. Yes, it's up a stick. 1.6% is a big stick. But the answer is equities are, I would say, John, bracketed given the geopolitical tensions.
Textbook risk aversion this morning across the board from asset class to asset class. Turn to foreign exchange, the euro weaker, the dollar a whole lot stronger, the euro against the dollar snapping 11 weeks of euro weakness. The euro against the dollar right now is 105.26. We're negative by 0.6%. Under surveillance this morning, the death toll from the conflict between Israel and the militant group Hamas topping 1,100, with fighting continuing into a third day. The Wall Street Journal reporting Iran helped plot the attack on Israel, Iran denying that report, while US Secretary of State Antony Blinken saying, Lisa, they haven't seen any evidence of Tehran's involvement.
This is the key question, is how does this expand? How does this escalate? Because we are expecting to get some information about what the next steps are from Israel in terms of some sort of potential ground operation, but also the threat of retaliatory attacks to Iran, which has long been known to be a sponsor of Hamas. So there are all of these questions percolating, and this morning I would look less at the price reaction and more just everyone scanning the news to try to understand what the next shoe is to drop, to understand how this evolves.
And what's so important here is not so much the diplomacy in talking about Iran and that. I'm going to go back to June 10th, 1967, John. I remember this very, very clearly in high school. Here's the exact quote from NPR's History. War ends with Israel claiming the Gaza Strip, West Bank, Golan Heights, and Sinai Peninsula to the Suez Canal. There was a shock then as they took over Gaza Strip from Egypt's protection. And that's where the tension began in 1967. And it has just been a struggle for all, every second for all since then.
Just getting an update from the Israel Defense Forces. Israel's army plans to call up 300,000 reserve soldiers to fight. This according, Tom, to the IDF moments ago.
And with some losses already, including some senior military officers. I'm by no means expert on that. We'll have Anne-Marie Horton with us here, John, in a bit. I think she's far more up to speed on this than any of us.
In the next hour, about 30 minutes away. An update elsewhere as well. The Bank of Israel moving to support markets in the wake of the attack, announcing it will sell foreign exchange for the first time since it allowed the shekel to trade freely. The central bank will sell as much as $30 billion and extend up to $15 billion through swap mechanisms. Elsewhere, House Majority Leader Chuck Schumer criticizing China's stance on the conflict during a meeting between President Xi Jinping and delegation of US senators. I urge you and the Chinese people to stand with the Israeli people and condemn the cowardly and vicious attacks upon them. I say this with respect, Lisa, but I was disappointed by the foreign minister's statement showing no sympathy or his support for the Israeli people during these tragedies.
And then he did speak with Xi Jinping after making these comments. At least that was the report. We are talking about a situation where I believe the Chinese statement said they urged peace and a two-state solution and did not necessarily condemn the attacks in and of themselves. There is a curious thing here, is that this is coming at a time of trying to normalize relations between the U.S. and China. And what I find interesting about this is we have all these different geopolitical tensions, whether it's Ukraine, whether it's China. Where does this take away from, right? In other words, where does this distract from? How does this add into all of the other tensions that have been percolating?
The Senate Majority Leader Chuck Schumer, Tom, in China at a difficult time. Let's see how she responds to that criticism earlier on this morning.
Well, and globally as well. I think everyone has to respond here. I'm fascinated how Erdogan responds to this. I think that's, you know, to the north, it will be just amazing to see, particularly going from Erdogan of 2002, John, out to the 2 or 3 Erdogans we have seen, and what's the next Erdogan, how he's going to respond to this. And I don't have an answer.
What a difficult time, Tom.
Yeah.
Just on Friday, I think we thought we'd wake up on Monday talking about payrolls still. That big move in the bond market.
Well, this is the
that's
shock.
just not part of the conversation at all.
Hey, let's take 3 seconds here before we get to our good guest on economics. And John, a worthy this weekend stated that so much of the manpower of Israel was over on the West Bank, off to the east towards Jordan, where the challenges that Israel has in the West Bank, and was the Gaza Strip territory undermanned and being surveyed by technology. That's not me saying that. That's from someone of some great expertise.
News becomes dated so quickly. The weekend edition of the Wall Street Journal, Tom, front page. The Saudis could be boosting output into next year off the back of the Israeli-Saudi pact.
Getting in the way, yeah.
Already talking about that breaking down and not happening almost immediately.
Well, we'll have to see. We'll continue to watch the story. And again, we're keyed on Anne-Marie Horton joining us here in the next hour. On economics, on our central banks at Aberdeen and the United Kingdom, Abigail Watt joins us this morning, research economist. Abigail, you do such a good job of synthesizing any and all. I'm going to begin with the base assumption that Israel, Hamas, is removed from the dynamics of our economics, but it does speak to a confidence within the system as tested by the bond market in the last 2 weeks. What is the measure of central bank confidence right now that they can assist, that they can do something?
I think you're right to kind of point to the way in which this would feed into our economic thinking. I think there's a few ways in which I would see consequences from the fallout of this. And I think, as a number of your guests have said, the extent to which this broadens out is into kind of other regions is kind of critical in terms of the extent to which this might feed through into, for example, higher oil prices. You know, that is something that we have been watching in terms of the context of higher headline inflation. And I think that does matter, you know, for while central banks might look through some supply shocks on the energy price side, I do think that the extent to which that persists might impact the broader kind of price basket, given the input costs for goods production and services production. So I think the extent to which we see oil prices remaining elevated, that's the angle that I think we would be thinking about.
To me,
in terms of the economic consequences.
To me, the key debate is the real yield. Is the real yield generally across 4 or 5 central banks at a tipping point, or is it just a trajectory to a higher level?
I think that's an absolutely critical question. I think there's a number of elements to kind of think about in terms of the first would be, I guess, higher for longer. I think we've seen, some of the repricing in bond markets is around this messaging from central banks. And I think that has been one of coordination across the major DM central banks around the idea that although policymakers might be reaching the kind of end of their hiking cycles, it is the case that they're not in an environment in which they feel comfortable to begin to kind of cut rates back again. And then I think the other element that kind of matters for that is kind of what's happening on that inflation side. And I think the question as to whether we continue to see this kind of disinflation trend continuing, or whether you see kind of some stalling and perhaps the progress on the inflation side begins to moderate in the coming months.
Well, there's been a lot of discussion, Abigail, over the weekend about the parallels to 50 years ago, the month that the Yom Kippur War took place. The parallels have been drawn for a whole host of reasons, not only because of the oil shock and the potential for stagflation to take hold in a more meaningful way. Do you think that the parallels that go beyond just oil are applicable to the moment that we're in?
I think it's an interesting comparison. I think currently, the key concern for us actually in the U.S. economy is domestically generated inflation, and I think that's actually what the Fed has been focused on so squarely as well. Looking at the core basket, looking at kind of core services in particular, and some of the stickiness there. And I think the data that we had out last week, and I know obviously events of the weekend have overtaken some of the kind of focus on that payrolls number, but I do think that kind of continued upside surprise in some of the labor market data is something that the Fed will be looking at closely. And I think that domestically generated inflation is actually probably a core focus just now.
We will get CPI on Wednesday and then PPI on Thursday to feed that. The moment at hand, though, does raise a question of how central banks can respond to geopolitical risk, how governments can. Fiscal authority is at a time where spending is constrained, borrowing costs are high, and inflation is still a threat, which really prohibits just a rapid knee-jerk cutting of rates. How does that factor into how you see this evolving on an economic level?
I think it's a really good point. I think that kind of focus, as I said, on domestically generated inflation, on the kind of issues at home that many economies are facing, does, as you say, kind of impact the ability of kind of central banks or governments to kind of put through kind of funding and support for such issues. I think one of the things, obviously we've seen the dysfunction in recent weeks in the US Congress and in the House in particular. And I think that is something that I guess is a concern ongoing around the ability to kind of react to some of these fast-moving events.
Abigail Watt 101. Let's do it right now. Price down, yield up. You at Aberdeen knows this. There's been a bond market bloodbath. There's no other way to put it. How does that constrain the degrees of freedom, the flexibility of major central banks?
I think it's a fair point, and I think this was something that Daly was getting at in her speech last week. When she was speaking, she talked about the idea that you've seen financial conditions tighten sufficiently to be equivalent to perhaps that final rate hike that the Fed has in its dot plot. We think that the November meeting is very finely balanced. We think there is a possibility that they could hike, given the strength of the economic data that we've seen, given the likelihood that we see that GDP data that's coming out just ahead of that meeting, coming in kind of well above trend, given kind of current tracking estimates. I think the question for central banks is how much does this kind of tightening in financial conditions, given the moves in bond markets, offset the need to do kind of further policy action? I think that's the kind of key thing for central banks and how they'll be reading that.
Abigail, thank you for your insight this morning. Thank you very much. Abigail Watt there of Aberdeen. The latest on the Israel-Hamas conflict entering day 3, the death toll topping 1,100. The latest in the last hour, Lisa. According to the Israel Defense Force, Israel's army plans to call up 300,000 reserve soldiers to fight. That again, Ramo, according to the IDF this morning.
And you really pointed out a really important point, which is that their efforts are really complicated by the hostages, which do raise the specter of a ground operation. Also, at the same time, Israeli Defense Forces said that it cannot deny that Hamas militants may still be entering the Israeli territory through some of the breached areas. So there is a question of stabilizing the south, let alone entering the next phase.
This coming, as you know, Lisa, just as we were on the brink of a pact between Israel and Saudi Arabia. This came from Israel's ambassador to the UN over the weekend. There are moderate countries in our region that want to normalize relations and live in peace and coexistence, and definitely Saudi Arabia is part of them. There was a feeling over the weekend that I think you can take a massive step back from that happening anytime soon, but I think that leaves it on the table just from Israel over the weekend.
That's what Israel is saying. That's what the U.S. is saying. Saudi Arabia has put out a statement trying to support some sort of two-state solution, and also saying that part of the situation was part of the reason for this. That said, you had Israeli officials coming out and say what they say officially and what they're saying behind closed doors are two different things. And you definitely feel that kind of geopolitical tension within some of these nations as they try to finesse their messaging.
I would, as people are getting up to speed in the story, John, I would not underestimate the immediacy of 3 days or beginning of 3 days of action. We can publish 1,000 dead, but the scope and scale, 1967, 1,000 Israelis died. 1973, maybe 3,000. We're well on our way to those kind of statistics quickly.
Shocking is a word we'll use certainly more than once this morning. Just absolutely shocking. Coming up next on the dysfunction in Washington, D.C., Isaac Boltansky of BTIG. That's next. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
When I spoke with Prime Minister Netanyahu this morning, I told him the United States stands with the people of Israel in the face of these terrorist assaults. Israel has the right to defend itself and its people. Full stop. There's never justification for terrorist attacks.
The President of the United States over the weekend following those tragic attacks on Israel. From New York City this morning, good morning to you. Equities negative by 0.5 on the S&P 500. First look this morning, obviously in the commodity market, looking at crude, WTI 85.91 up by 3.8%. Tom, we're looking at the Brent crude price this morning, 87.65 up by 3.6%.
It's a nice lift there on a percentage basis. I don't think it's a surprise to anyone. And, I guess it goes, and I'm going to act like I'm pretend to Javier Blas. It comes back to the Suez Canal, which has been part of these tensions. And even though Egypt is perhaps sidelined from this war, the Suez Canal is close, and that will definitely affect the oil price.
Front and center Iran, Tom. Halima Croft of RBC talked a lot about her research over the years, talking about it a lot this morning. Whether Israel directly implicates Iran The Wall Street Journal, to some degree, did yesterday with this reporting. We've not heard that confirmed by the US administration. And Tom, we haven't really heard that confirmed by Israel either.
Yeah, the confirmation's not out there yet, but yet is there. I mean, we have to remember we're 2.5 days entering a third day into this. I'm not all that concerned about it, other than the persistency of what Iran has been doing. Not only, and again, I mentioned this, John, I think it's really important for people getting up to speed on the geography. This is a two-front war, and I'm sure Israel's maybe a three-front war, but certainly to the north, Lebanon and Hezbollah, it's front and center as they focus on the south and Gaza Strip.
We need to talk about America's response to it, or potential response, the dysfunction at home. We've talked a lot about a speakerless house. Tom, based on my understanding of things, no ambassador to Israel, to Egypt, to Lebanon. And the list goes on, by the way. The list goes on.
Smartest thing I've heard this morning was Norman Rule. We have to staff up. Maybe we have to staff up here on our military. Let's get to it with Isaac Boltanski, Policy Research Director at BTIG, with an understanding that the United States of America is not staffed up. Isaac, there is a photograph of Lyndon Baines Johnson talking to Abba Eban in 1967. You can feel the fear in the room. The good news is they had a Speaker of the House to legislate off of, and John McCormack. We are fractured. How serious is the fact that America in 2023 is not the America of 1967?
Yeah, well, three things come to mind, Tom. Number one is I agree with the notion that it's time to staff up, but I would posit that the time to staff up was probably before this. It was weeks and months ago when we had time to do so. We have held up dozens of military appointments in the Senate. We have no ambassador to Israel, as you mentioned. There are numerous meaningful appointments across the U.S. government, especially in foreign policy, that remain vacant for what have largely been petty or parochial reasons. And so that's point number one. You will see the Senate move quickly for some of these nominees, but even the Senate moving quickly means we got to wait a few weeks. Number two, when we think about the House, it is a little bit silly to talk about petty personal politics with what's going on in the world, putting it into perspective. But that's what we're going to have this week. And right. I'm not wholly convinced that we're going to get a speaker by the end of this week.
Now, come on, Isaac, you've lived this, and I lived it too, off the fields of Ohio and onto the West. There's an American isolationist streak that says the Eastern Mediterranean is not our business. Define modern isolationism in your Washington.
Modern isolationism is that we do not have to be involved unless it impacts us directly. Of course, this will impact us directly. And I can tell you that the White House does have its kid gloves on when it comes to Iran at the moment. I think you mentioned this before, in part because it's trying to figure out what's going to happen with the prices of oil. And I think that crude dynamic is crude, but it's something that we're going to see playing a larger and larger part of this discussion when it comes to sanctions. What happens with Saudi Arabia and Iran when they get pulled into this more and more? What are we going to do with Iran when they're more directly implicated? What does that do for Saudi Arabia, who was already showing some signs of a willingness to increase production next year? And so, look, all of these things are playing into a White House who was already thinking about